Welcome to Trade Live with IG. It's June. Nice to meet you.
It is 2nd of June.
You're looking very smart this morning. Is that a new shirt?
It is a new shirt.
Doesn't still have the creases on it?
No, I've had it hung up for about a day.
Really? Good. Right, so welcome everybody. Welcome to June. How was your May performance, everybody? Did you beat the NASDAQ up 10% in a month? Probably not.
No.
I definitely didn't.
I did it right.
Yeah.
But not 10%.
Yes, a solid like 1.5, 2, I think I was.
Did you get fired as fund manager, don't you? You didn't beat the benchmark, so.
Yeah. True. No, I used to do hedge fund world. I was between 1 and 2% every month, and I never had a down month. I only had a flat, because you do anything the last couple of days to get back to flat.
Yeah.
Like trade futures, just in and out. But yeah, decent month. Happy.
Yeah, I don't think as many people will have been up 10% last month.
No.
Really. So.
Unless you're in Smarter Web Company, like Mr. Maturin on the chat. Right, good morning, everybody. We have the usual lot, don't we? Boise rightly saying, welcome back, Angeline. She was in this morning.
Yes.
Angeline normally doesn't get in till about 7 a.m. But no, boom.
Positively late.
She's forgotten to change her clock, I think. It's an hour ahead.
I'm back on Milan time. Yeah.
Now, how was your weekend, Chris? Where were you off to? On the BBC?
No, up in Ripon in North Yorkshire. Very nice. Lovely weather. Just for the weekend. Up there Friday night. Came back late last night.
In the car?
Yeah.
How was traffic?
Traffic was fine, actually.
Wow.
Actually, the motor was really, really good.
I went out to the comedy store, comedy night in Leicester Square on Saturday night. And normally, it's absolute hectic at that time. Completely empty. Everybody was watching Champions League, which I just wasn't bothered about.
Well, the cricket was good, the one-day match yesterday. We beat the West Indies. We're playing again tomorrow, but I think the forecast is supposed to be awful.
Right.
So.
Good. Right, let's have a look. Andrew McKelvey, before we get into that, let's have a look at what's coming up on today's show. We have a very strong Monday. That's right, myself and Beachy through to 8:35. We're going to be previewing the week, as Chris's email dropped into my inbox yesterday. Did the rest of you get it as well? Then Angeline has Matt Arbour on. Then we'll do the all sessions opening bell. Be quite interesting because the futures are looking lower. Martin Harris joins us again. He gave us a great interview on Friday. And then Axel takes us through with trade of the week. Got a very good NASDAQ last week. Let's see what it's going to be this week. Right, shall we go into overnight action, sir?
Go on then.
Good. Right. Yeah, Andrew McKelvey talking about Greatland Gold. We're going to take a look at that in a second as well. But yes, a retail offer, 0.3% of the company. Exactly. Why bother? Do you want to run us through your trade of the week? Sorry, not trade of the week.
Don't ask me.
your preview of the week that comes in the email.
The week ahead. Yeah,
week
sure.
Ahead, yeah.
It's interesting week. Mixed week to start with, because you've got obviously payrolls on Friday.
Yeah,
it's going to be the culmination, if you like. So
it's a big one this week, isn't it?
It is quite, because of course, and this is what we're starting to get. And we've had this actually from the China PMI on Saturday, which was weaker. Is that you're now getting the dreaded May data?
Yeah,
because all the way through May it was, well, this is April, this is March, April data. It's pre-tariffs. It doesn't really matter.
Yeah,
it has a kind of indication, but yeah, not much going on. And now suddenly, you're getting the stuff from after the tariffs have been imposed, paused, whatever, for a few weeks.
Yeah. And
you've already had signs of that in the weakening factory data in Asia. So that's certainly put some pressure on stuff, although the Hang Seng's rebounded early this morning.
There's a rebound? Because last time I saw it was still down 1.5%.
Yeah, it was still, but it's well off the low. So if you look at it, it's about 200 points off.
Wow.
Low, so a little bit of recovery for the Hang Seng late on. And that's the key thing, because you've had obviously Trump. The taco stuff of last week, which if people missed this,
they prompted them, didn't they?
Always chickens out, and even I can take some blame for that because I got quoted load on it. New York Times and stuff picked us up. and MSNBC.
Wait a minute. You can't just throw that out. You were quoted in the New York Times, Christopher Beecham.
Yeah, we were. And in fact, it was then used by the guy on MSNBC, Lawrence McDonald. He does a daily 10-minute comment, and he's anti-Trump, so it's always fun to watch. But he picked us up there, and we were there live. I'll share the screen grab later. I'll send it to you.
This is incredible. Right, so Chris Beecham is responsible for the big tariff escalation that you're seeing now. So, of course, Trump did not like being accused of chickening out. So he has gone full frontal back into doubling the steel tariffs, which has really annoyed Europe. Europe threatening to get their own back and escalate.
This is what we were all saying last week. We keep saying this, but if he watches this and realises this is what we're all saying, because it should be fair, TACO was coined by Robert Armstrong of the FT.
Yeah.
So that's where he came up with the brilliant acronym, which is Trump always chickens out.
Which is brave.
Yes, but we're all talking about it now, just poking the bear. Whoops. And then, lo and behold, the bear responded. Or the big orange man responded.
He did. First of all, accusing China of breaking the rules. And which China have now come back and said, no, you're breaking the rules.
We're back to this again, aren't we? We're just mudslinging.
So, 5,875. Let's have a quick look where we are with those futures. 5,873. Pretty high, considering there's a lot of mudslinging going on, and you've got an angry bear who's just been called a chicken. Yeah.
But even now, I see the market is pricing in, but we've seen this movie before. We've seen him announce this stuff, wave his big stick around, if you like, and then actually change his mind.
Yeah.
So that people are trying to say, well, surely this is all priced in. That the 50% on tariffs on steel will get paused again. So maybe we're playing with fire this time around. Certainly, but the history of the last 6 weeks. How many weeks is now? 8 weeks since tariffs. It's like about 8 years.
It is exactly today.
Yeah,
8 weeks today.
It is, yeah. Oof. Wow, since we sat there that Wednesday evening, and you had that water jump.
And I went short as well. That's what really annoys me. I went short, so 5,600 it must have been. No, 5,540. And I must have closed it at like 5,450, not realising we were going to go another 600 points lower. Yes. Boise rightly says, please let us know who your next victim is, who you're going to wind up next.
I know, exactly. Putin. No. He's had as bad a weekend as it was anyway. So.
Oof, yes.
Very impressive.
$2 billion of damage.
Is it 2 billion?
Well, that's what Ukraine estimated it at.
Okay.
Yeah.
Very, very clever.
Now, you can see on the futures there, as well as being small lower in the S&P, we've got oil up 2.75%. You've got copper up 4%. Now, of course, copper is because of the fear of tariff escalation. Because you can see there that the LME copper is not up. LME copper is only up 60 basis points. The high grade, which is the US version, up 4%. But oil, what have we got going on there? Any idea why that one's up?
I don't know. I was practically trying to work out why. What's the reason why oil is up so much at the moment?
Let's see.
It does look like it's poised to make a sustained move higher now, doesn't it, really?
Oil rebounds after OPEC decided to increase output in July by the same amount as it did in each of the prior 2 months, in line with market expectations. So that was good enough to get it higher.
So it's just because they didn't produce more.
Had they gone through with a surprise larger amount, Monday's price open would have been pretty ugly indeed. So so light relief there.
Light sweet crude relief there, if you will.
Very good. Right, so that's where we are with futures. Where are we with the front page of the newspapers? Well, of course, the Financial Times is covering the trade issues. So China accuses US of seriously violating the trade truce.
Not just violating, but seriously violating.
Seriously.
Special kind of violating.
And has vowed to take strong measures to defend its interests. So that is part of the the ongoing. And then front page of the Times. What did I see on the front page of the Times, Chris? I
there was a
don't
story.
know if
No,
there
I can't
was
remember.
much going on.
No, there was something there. Wouldn't like to.
That's a good picture of Trump, isn't it? What is he holding there? Right, so yeah, more on Trump steel tariffs threaten UK industry amid trade deal push. And we've got also, the story about AstraZeneca from Friday. But there was one more I wanted to touch on. Where has it gone? No, I'll come back to that. But yeah, the FT, the best thing in the FT, I think, is a discussion by Mohammed El Erian, of course, formerly of PIMCO. And
I haven't read that. I saw that this morning as I came in. I need to sit down and read that.
Yeah, it's good. He's pointing out there are 4 important things to watch for in the next month, and it's going to be a really hard month for the Fed. And those are, of course, tariffs, which we all know, and the data. He says the data has been unreliable, which Chris has already touched on this morning. Now we start to get the real stuff.
Yeah, the hard data.
The hard data. What's coming up this week, starting this very day?
ISM PMI is the first one you get, isn't it? That's manufacturing PMI from the US. And you also get the final PMIs for April or whatever it was, so that's not really desperately important. But ISM manufacturing PMI this afternoon at 3 p.m. as normal. So watching that, of course, and not just the manufacturing figure itself, but the prices paid index as well, and the new orders, really. I mean, data, it's
expected higher at 49.5.
Yeah, but still in contraction, isn't it?
Yeah.
Overall. So that's the concern, I think. And it's not often that people closely watch the ISM quite as much as this, is it? But this feels like from now, as you say, and this is Elarian's point, from now until probably the other side of the summer, data is going to be very closly watched.
Especially now we're through earnings season.
Exactly.
So
exactly. But Nvidia's done and dusted. Nobody cares about whoever's reporting this week because it's not important. A couple of retailers actually in the US, to be fair, Dollar General and Dollar Tree, I think, are both reporting.
Yeah.
But yeah, so that's the first thing we go with today.
And others reporting this week. We do have Broadcom. So Broadcom, decent.
Yeah, to be fair.
And then also Lululemon as well, which reminds me, I got to get some new yoga gear.
As you do.
And spend 100 quid on it.
Yes. And then, of course, it's the ECB decision, isn't it? Do you want to skip
ECB Thursday.
Thursday. So Wednesday is services PMI, isn't it?
That's right. And that's expected to come in at 52. So also higher. So yeah, interesting that we're expecting higher than last month, even with the messiness going on. And then, as you say, ECB decision is they are expected to drop to 2%.
Another rate cut. Because the French inflation data last week was weak, wasn't it? So there was a sign that would be in sort of strengthening the case for continuing to cut rates, really. So that's, Thursday. 1:15, always a Thursday. And then jobs data as ever, the weekly jobs data, and then finally Friday, of course. The big one.
Ooh, only 1:30.
Yes. But the unemployment rate holding at 4.2%, so that's another interesting possibility there. And average hourly earnings still relatively robust earnings, but not too strong, I think. But you do get a sense that this gets a lot more interesting from here on the data front. Yeah, I wonder, do we keep an eye? Is Thursday going to be the early warning on the weekly? So we've got... Well, of course, you get ADPs on Wednesday, and that's supposed to be a bit of a shocker, I think. I think the ADP figure is meant to be, just 70,000, but that's slightly up from last month. Always be careful with the ADP number. It's always, it's the preview of payrolls, but they very rarely line up. Yeah. So don't bet the farm, as it were, on ADP coming in and saying that means that payrolls will be this, because ADP often lies. But that way. 3 days of it, ADP weekly and non-farms, if they're all significant, then that's going to be really interesting. Yeah, so it really is from this point onwards, all the data starts to become key. Really.
And that would be the beginning of the unwind of everything. If we start to lose jobs.
Yeah, maybe. This is the key thing, isn't it? How much was priced in through the volatility of April? How much is still being priced in now? It feels like to a lot of people, understandably, look, we've gone back to optimism and euphoria. Maybe we have in a lot of ways. Probably not quite as bad as we were, but I was looking at the S&P last week. We're back at what, 23 times earnings or something on the backward-looking P. I don't know where you are on the current one, but so it does feel like we're back to being a bit blithe in terms of our optimism, especially if you're the DAX. Record highs, 24,000 last week for the first time. That feels like there's an awful lot of optimism priced in there.
Yeah. Okay, so yeah, perhaps time to have a look around, see what alternatives there are. We've got a couple of things, but we'll say, Monkey Man, did you sleep in this morning? It's been spotted, sir. 7:41. What happened there?
Late, very late. Almost as late as I was for rehearsal yesterday morning. There we go.
What happened there?
Oh, it was a heavy Saturday night, obviously.
What, on the drive
I wasn't
back
the last person. I wasn't the last person to rehearsal.
And what is this rehearsal for?
That was in Ripon in the cathedral, so I'd been in the cathedral for 9 o'clock in the morning for a 10:30 service.
Oh well, you were just being efficient then.
No, I was just being late. That was the problem.
And how did that go?
It was really good. Very, very good weekend. Yeah, it's always nice to go to Ripon. They're a very nice, friendly place. Lovely town. Have you been?
No.
No, you should.
No.
It's nice. Yeah.
It's got a horse racing track, doesn't it?
Yes, it does.
Yeah.
Yeah.
But talking about nice places, nice people, the pub quiz last night, we came fourth.
I know.
But I did take a question that I thought would be good for you all this morning. Which word changes its meaning depending on its capitalization, with one form being a nationality and the second form meaning to make your surface cleaner? So which word changes its meaning depending on whether it's capitalized or not? One meaning being your nationality. Second, to make your surface cleaner.
Oh my goodness. It's not Finnish.
Well, that's interesting because that is what a couple of the teams went for.
But it's a
And you're
brand,
correct, it's not Finnish.
Okay.
Because there is a double N
Okay.
in Finnish.
And there isn't a double N in there.
Oh, Dennis Rapite, boom!
Very good.
Nailed it. That was good. He got that very quickly. So the reason, of course, I mentioned that not for just a plug for the pub quiz, but of course we have a new Polish election result.
I wonder where we were going with this.
So, the historian came from behind to defeat the centre-right rival. And the win, of course, this was the Trump-backed candidate that has won. You can see he's gone with the same tie. And there we go. So that's a heavy blow for Donald Tusk.
Tusk, isn't it?
Tusk.
Donald Tusk, but yes.
Tusk. So yeah, so we'll see if there's any move in the Polish stocks this morning. And right, so coming up to 7:50, we've got 10 minutes to go. We'll take a quick break there because we've got another quiz for you, and that is, of course, what is the chart of the day? That's coming up now. What is the chart of the day? See, you've got the time of the break to get it. Let's see who the first one is to answer. And we'll be back in 2 minutes with some upgrades, downgrades, and opening expectations. See you shortly.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Well, you all nailed it, didn't you? WTI, far too easy. I've got to say, his first one that he put up this morning was the DAX. And I said to him, that's too easy, mate.
Everyone's got that one memorised.
Yeah, we've got 17,000 products in IG, and he
start people off easy.
You want
them to get soft hogs, whatever the hell it is, later in the week, lean hogs.
Well, you know why it is. It's because he's moonlighting. So producer Phil has 2 jobs today.
Is he?
And I know you're watching right now because you're on your way to Shoreditch already.
Where's he going there?
So he's west by southwest or something. So there's something going on.
Right.
So he had already pre-committed when we made him official full-time producer of the show.
Okay. But my favourite answer is David Boyce. How many times do you say Vodafone every show?
Ah!
So That's very good.
It's dividend week, people. We're getting paid. Oh, yeah. Right, that's right. Vodafone, 2.5 cents, euro cents. Go next dividend on Thursday. Cha-ching.
You need to make Vodafone great again, the hat. That's what we need for you.
Doesn't work, does it? Mava.
Doesn't have to work. Neither does Vodafone share price, but that's another matter.
Oh. Right, there he is. I'm listening, McDonald. Go on, Phil, tell everybody where you're off to. Something funky, something to do with music. And
It must be funky because it's Shoreditch.
ABBA and... Yeah.
ABBA.
Yeah.
You don't know. You're making it up.
Maybe that's what he's doing. He's not moonlighting. He's actually going to find us some more music.
Oh, yeah.
Dave Davies doesn't like the music.
Well, it's a bit... Even I said it was a bit game show. Although maybe it works for Chart of the Week, but there we go.
Yeah. Right, Monkey Man's caught up. We're fine. We can continue now. We put in an extra 1 minute on the break, so we had the chance to catch up. So let's crack on with this show. Michael Hartnett is saying the next market breakout or breakdown hinges on these three signals. Right. The first thing you've got to watch for is the three indicators in risk assets, right? So there's three things you've got to watch for. Those are the brokers. Okay, so that is the XBD. Let's show everybody what he's talking about. The XBD, where am I there? Why am I not getting that? Brokers. No, not getting that one. The banks, of course. So for that one, that's easy. The bank sector swap. So what's for that one? The brokers, the banks, and Bitcoin. That's the other one. That's the risk asset that you will see move aggressively. And then Hartnett points out that double tops are very bearish and a clean upside break would be very bullish. So let's just have a look at...
So if it goes down, it's bearish, and if it goes up, it's bullish. That's...
You pick that fight with Axel at your peril.
I've...
If something goes down, you want to sell more. If it goes up, you want to buy more.
Well, yeah, if it goes down, it might keep going down. If it goes up, it might keep going up. But
welcome to technical analysis.
But he said this a month ago. He said sell the rebound in US stocks a month ago. So
Hartnett did. So there is your risk of a double top. That is well, in some ways it's triple top, wouldn't it? But we won't argue. That is what he's speaking about there. Then he says, of course, the 30-year Treasury rally, right? That one is something very much to be focused on, which we have been. And, of course, you can find that on CNBC bonds. That's right, as in James. Multiple. There's potentially a new bond.
Oh, the excitement.
Never heard of him. But, yeah, potentially new bond. Didn't even ask me. They didn't even give me the chance to interview.
James Bond, again.
What?
One is enough, surely.
Right, so there you go, the 30-year yield. If you see that go up above 5.1%, get those hard hats on. And then his other question is about the US dollar. Is the US dollar in trouble? Chart off, thanks, guys. Despite peak tariffs, the Dixie is still sub 100. A weak US dollar is a deliberate policy tool to revive US manufacturing, which of course we see at 3 p.m. this afternoon. Weak US dollar bullish for gold, emerging markets and international equities. So that's your strategy.
That's Bank of America's view.
Bank of America, Michael Hartnett. It's yeah, real, strong. It's a strong piece, but those are the main takeaways that I took. Right, yeah, you've got 25 seconds. You don't want to be late to the bell like we were on Friday.
Oh, were you?
Chris Bouchamp.
It wasn't me on Friday. That's why you were late. Poised.
There we go. Right, let's count down then. We've got the London Stock Exchange opening bell. One day we'll be sponsored by them.
When's this new bell coming, by the way?
Well, when they sponsor us. Here we go, people. We are off and running on this wonderful Monday morning. It's bright and sunny, but oh my goodness, take your antihistamines because we are both sitting here sniffling and sneezing. But how is the market? Is the market sniffing and sneezing this morning? British Petroleum up 80 basis points. Is enjoying that oil rally. Do we see it break out of this this range it's in?
Possibly. It should help a lot, really. But then this OPEC stuff, just because they didn't increase production by more than expected, but they might do next month because this is the thing. So you feel like oil is still, I don't know, circling the drain a bit, really.
It's circling the drain. I've never heard that as a technical term, and I very much like it. That is a good one. Weatherspoons, that might just be a funny print. I'm not sure why they'd be down 4%. And what's our first one of the liquid ones there? Ocado, down 1.5%. Yeah, the FTSE's not really where it's all happening this morning. Diageo, of course, if there's any tariff talk back, then down 75 basis points there. Antofagasta is an interesting one because high-grade copper's up 4%, and normal copper, LME copper, is up 60 basis points, but Antofagasta down. Maybe one to watch there. Rio Tinto, that makes more sense. Of course, that's iron ore.
Anglo's up 12%.
Which one, sorry?
Anglo-American. Still in auction.
No, so, okay, there is something for us to watch today.
It's the demerger, isn't it?
The demerger of the platinum assets. So this is, do we have that on the, can you check if we've got it on the site yet, actually, please? So the artist formerly known as Anglo Platinum is demerging from Anglo American. So that'll be an interesting one.
I thought I saw it the headline this morning, but hang on.
Yeah, but basically what's happening is that as a shareholder of Anglo American, you are now getting shares in Anglo Platinum, which has been renamed to Valterra. Valterra, V-A-L, and then Terra as in ground. So Valterra is the new Anglo Platinum. It is now listed in London for the first time. However, asset managers that receive this this share that they don't want will be selling it over the next few days. Therefore, you could see some pressure on Valterra, and that could provide potential opportunities. So just keep an eye on that one. It will be interesting, and that compared with Anglo American. But is Anglo American up
Because of that.
because of that? Yeah. Are you getting a reweighting in your
It was consolidation.
shareholding?
Consolidation of shares was the other thing there. Yeah. A 109 for 96 share consolidation. That's why you've got. But
Okay, so Anglo American is not up 12%. It's a share adjustment. So you've got less shares and now a higher price. That makes sense. Okay.
so that's the reason why.
Somebody's going to have a mess on that, aren't they? Right, here we go. We've got it. Excellent. Valterra Platinum Limited, London. Let's see. Yeah, it's a wide spread at the moment, so obviously do not touch this thing at the moment with a 90-cent spread. But that's the stock you want to watch, Valterra Platinum Limited. It, of course, trades in South Africa as well, so be careful you choose the right one. That's still in auction, and this is the old Anglo-American chart. So there you can see over the past few years, it has been a dreadful destruction of value, but perhaps more interesting over the past 2 years. Traded in a bit of a range there, to be honest. But it's going to be an interesting one. If you see a lot of selling pressure on this in the coming days, then we'll keep you posted on that.
Yeah, I bought Anglo's about 9 years ago at about £5 a share. So I didn't sell at the top, unfortunately, so there we go. But
yeah, it's an interesting one because that bid was 30. Well, it was over £30, nearer to 31, and surely shareholders just wish they'd taken it.
yeah, but don't call me Shirley. But yes, definitely there was that case. But yeah, I mean, they're not great performance the last couple of years, left out of the general party, really, certainly underperforming in the FTSE 100, I think.
Yeah, underperforming the FTSE most definitely, but underperforming most of the other mining stocks as well, I would think.
Yes, but I wonder what you get.
But is Clean Anglo going to be a lot better? Of course, they've been selling their coal assets down. They've now sold, well, demerged platinum. So is this now a nice clean iron ore and copper play that you would be interested in? Let us know in the chat. It's definitely going to be one to be watching.
You still got 5%. You got nearly 10% a year off Anglos for the past 5 years analysed, when you include the dividend. Sorry, a bugbear.
Really?
Yeah, that's what my Reuters platform's telling me. So it must be true. It's not my working, so it's probably more reliable.
So there we go. Anglo-American adjusted up 1.2%. So adjusted up 1.2, which is... That's interesting in itself because the rest were down a minute ago and up more than BP. I wonder if there's any effect there. British Aerospace up 2%. Do you want to just go through some of the defence chat of the weekend?
Well, yes, this is the defence review, the much anticipated defence review is supposed to be out today. The expectation is that, well, the Times is reporting that will build up to a dozen new nuclear submarines.
Start off, guys.
The keywords there are up to a dozen, so don't get too excited.
Guys, chart off, please.
Also, you've got, I think we're expecting more on the nuclear programme. But the reports from over the weekend said that actually we're expecting, before Heg's speech earlier this year about Europe having to do more, they were actually going to see another cut to defence spending. Now they suddenly had to go, oh, crap, we have to throw all our money at it, really. And yeah, so that's why you could watch the defence stocks again, BAE, Rolls-Royce, to see how much money the government is going to throw at this, because the defence secretary is talking about, oh, we want to get to 3% of GDP by 2034, which is ridiculous.
Yeah.
But then, because there's a lot of uncertainty, because he's going around saying this, and then someone rang up number 10 and said, well, do you agree with this? And they said, no, that's just his personal opinion. So, but he's been saying it again yesterday evening and this morning. So we don't quite know what's going on there, but it's enough to give these names a bit of a boost.
Kunsberg was having a real go at the Defence Secretary, saying, Monkey Man said, yeah, chart off. Thank you, Monkey Man. They're actually listening now, chatting amongst themselves. This is what happens, Producer Phil, when you pee off to go and do other things. I'm saying chart off for 3 minutes before the chart disappears. So I can't go into the FT and get the story that we're talking about. So the story that we're talking about is this defence review, and the Financial Times leading with the story, Britain to build up to 12 attack submarines.
Yeah.
As it moves to war-ready footing.
But you see, even if you build one every 18 months, I mean, that's still that's a heck of a long time. Because these things take so long to design and build. The Astutes that are currently there, the 7 boats, all submarines are boats, not ships, don't forget, have taken years, and some of them are still stuck in port. So it's
disaster.
It's been a bit of a mix. I mean, they are highly advanced and they're very complicated, but there's only 7, and this is the problem of defence procurement these days, is because you gold plate it, they've got to be, there's only a few of them. So there's not this sort of redundancy, if you like. Everyone's worried that you've seen how that's affected warfare. I mean, where is the UK in drone?
Well, it's exactly what, away from the numbers you just asked, we have made 10 drones since Labour came into power.
Is it 10?
10 drones.
And they're turning out 1,000 a month in the Ukraine.
And in China, 1,000 a day.
Yeah, exactly.
How worrying is the fact that we're so off the pulse with that?
Well, I think the West generally is. With everyone, the Ukrainians are the most experienced people in the world now at fighting wars, modern warfare, really.
Right.
So they think that with Ukrainians come here for training, but really us need to be going to them
in a few years'
because
time,
they've seen so much. The other thing that they didn't tell the Americans about that attack at the weekend either.
Did they
drone
not?
strike. No, they specifically didn't tell them. 18 months in the planning, apparently, this. They did you read about this?
No.
They hid the drones in lorries and they drove them to near Russian air bases, and they put them inside wooden sheds, and they were operated remotely. This has been in the planning
that's
for
some
months.
really impressive
It's incredible. Really.
undercover stuff.
Supposedly having peace talks in Istanbul today, so that could be a fun conversation. How was your weekend?
Well, it's exactly what you do before peace talks, isn't it? You in theory be your loudest and your
of course,
your biggest.
Of course, they've been waiting for this and to sort of prove a point, I think.
Yeah.
So very interesting.
Right, Rolls-Royce share price. That's a good point, Andrew. I think we failed. Let's get an update on what the Rolls. Did we make our subscription target for the week? I fear that it's so. Let's see. We take 10 off that. So Rolls-Royce closed at 867 on Friday. And we are at 841 subscribers. So we failed, people. We failed.
New record high for the share price. There you go.
Yeah, that doesn't help. Right, what is our new target then? I'm not happy. I do not like losing. So what's up and around 900? Give us a share price that's up and around 900, or a commodity or index or something. What should our target be this week, people? What should our target be? Something that's around 900-ish, because that's what we are lapping at the moment, about 60 to 80. Don't make it too easy. Don't go like, Rolls-Royce this week. Boring. We'll smash that. And it was bank holiday. Bank holiday adjusted.
Okay, bank holiday adjusted.
Yeah, that's why Phil's out the office, Monkey Man, because we made him part-time because he failed. Right. Kate Murphy, stop boasting. She's saying her return percentage up on Rolls-Royce, which is 1,100 now. She's up 1,100%. Okay, so people, please give us your suggestions for what our target should be this week. We like a moving target, far more interesting than just saying, a Porsche 911.
Oh, right.
Come on, Chris.
Sorry. It's the way you tell it that's the problem.
Shall we have a look at commodities or European stocks, Chris Beecham? Which one would you like to go to next?
Oh, let's do European stocks.
Right.
What have we got?
Well, then, of course, it is Rheinmetall.
The stock of the year, probably, isn't it? A German defence stock.
To be fair, it probably is. It's this has even outperformed Vodafone. So Rheinmetall new highs, 1,936 euro, up 2.7%. Of course, I guess people are judging that the weekend didn't help the chances of peace.
Yeah. And you have the German defence chief saying Russia could attack NATO within 4 years, was the kind of statement. So, and how much of the Germans spend on defence? Is it 200 billion euros initially, and then more to come?
Their promises. Yeah. Oh, absolutely incredible. To go back and to have actually done proper work on Rheinmetall, anybody who's bought this, well done. Because I, frustratingly, have never been long this thing.
Well, you wouldn't be.
I even tried to short it for 10 minutes, but literally 10 minutes.
It's tripled since January, isn't it? It's incredible.
It's up 300% this year.
Yeah. It's only about 600 euros a share.
Oh, dear.
If only you'd known, etc., etc., etc. But,
Yeah. If only my girlfriend was German and knew all about defence as one of her favourite topics. She is the one who bought Rheinmetall the very day that Russia stepped over the border.
So back in March 22?
Yeah.
Very good. Tenfold return. Very good.
Yeah. Very smart. Far smarter than me. So what else have we got? We've got, Bayer up 1.3. But what about on the downside? Perhaps more interesting today. Yes, Stellantis. The usual names at the bottom there that get caught up all the time. Kering down 2.5. Where does that leave us? Actually, this thing tried to rally and it's back down again, isn't it? Yeah, look at that. It's that is a bit of a failed rally up at 190. Chris Beecham, the Gucci expert, what are your thoughts there at 168?
Oh, grim, isn't it?
That is
Not feeling much love for that one, is it, really?
grim. And you're
Luxury
not talking
stuff.
about being up north at the weekend.
No, it was very pleasant up north.
Exactly.
Yeah.
So yeah, that one just absolutely
Value
dreadful.
destruction writ large, isn't it?
I tell you what, let's
Painful.
get Axel to speak about that one on his weekly later, because that will be of interest. Right, what else there? It's general. Oh, it's a bit ugly, isn't it? I'm still short Adidas. I'm very happy with that one. I think the brand is just perhaps resting on their laurels a little bit with an incredible 2 years that they've really stolen market share from Nike. We think Nike's back on the up, and Adidas not really coming out with anything particularly interesting. All the trainers starting to look the same. So Puma, another big failure, down 2%. Hermes down 1.8. Volkswagen, Renault, Mercedes all down. Louis Vuitton down. The usual culprits in Europe.
But there's no headlines to drive that. It's just a poor open. Is that what we're going with? Is that?
Yeah, just the general market being lower, but of course most of them are involved in China or
True.
European tariff
Yes,
world.
a lot of focus now on how China performs with the tariffs back in. So true. Yeah.
Okay, right, finally on commodities, and then we'll go to fast markets. We've got, we still got M&G up there the other day. I was interested in that one. It did not kick on from being up 6% on Friday. So commodities, general strength across the board there. Gold, oh my goodness.
Gold again, 2% on gold.
That was only up 60 basis points last night.
Safe haven buying. Here it comes again.
Ooh, those are some punchy moves actually. High grade now up 5%.
Very good run. Yeah, for copper, a lot of concern now there.
So unfortunately, the companies don't really benefit from that.
No, natural gas 3.5% as well. Gosh, very strong morning for commodity prices.
Yeah. Okay, right. If you are watching and you're not subscribed, please do subscribe because we are. Oh, HSBC, Monkey Man saying. Now, what price is HSBC at, Chris Beecham?
I suppose 871.
Nah, I'd be disappointed if we ended up with 870. There you go. We've got Ollie02JG saying, can we review the subscribers chart? Can we buy the subscribers chart? Can we go long that?
How's your Excel skills? Can you whip it up for us?
Yeah, we'll do that. We'll get you a chart on subscribers. I'm sure Sophie, if you're watching, the viewers want a subscribers chart. So I think HSBC is a little bit too pessimistic, Monkey Man. So we'll have a think over the break. But yes, if you're not subscribed, please hit that subscribe button. And we'll be back in, we've got a bit over, haven't we? We'll be back in 2 minutes with Fast Markets.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Right, welcome to Fast Markets. That's right, we're going to take a look at take a look at Burberry. I think that's definitely one Monkey Man shout, good shout there. And then Boise saying we're going to take a poll on the S&P 500. Do we think by the end of this week it's going to be higher or lower? So Friday, 9 p.m. is the S&P going to be higher or lower? Without producer Phil here, can we do a poll?
I can hear.
He's on it. The S&P 500 on Friday 9 p.m. Is it going to be higher or lower? That'll be this morning's poll. We like that one. And Chris, just going through the S&P 500 there, with your expertise on those economic numbers we seen this week, what do you think's the main thing to watch?
Well, it's going to have to be payrolls, I think. It's the headline number. The focus is going to be on how is it performing around expectations. It's the event of the week, I should think, really. Yeah. I think ECB's nailed off 24 basis points. Payrolls, there's a lot riding on, as we say, as the first of the real hard data. Is that enough? Because this was Aaron's point, isn't it? The soft data, it's a bit sort of, I think, if we say manic depressive, it's all right. He gets a bit excited, goes back down again. It was definitely the depressive side of things last week and the last couple of months, really. Yeah. And now it's rebounded a bit. So the question is, how is the hard data going to show? But payrolls, you've got to be so careful, because even if it misses, will there be enough revisions in last month's figures to offset it? Or can you look at the wages?
Okay, what would worry you? What would be, doesn't matter what the offsets are, that number is...
Yeah, well, because it's a fairly low number, isn't it? Setting, what was it, 133?
Yeah.
So if it drops below 100k as well, that could be a bit of a nasty shocker, I think, because people seem keen at the moment to look into the data and take a negative view, really. So that's...
Yeah, bad is bad.
Yeah, bad is back to being bad, because the Fed is at the moment not likely to ride to the rescue because of the worry about inflation. And if you get a very strong wage number, if wages spike up again, that, I think, could be the market could take that very badly. Because if you get ISM prices paid, if they start going up this week, and then if wages go up, then we're more into stagflation territory again. Okay, so a double hit of jobs lower and yeah, that would probably be the worst. Over the opposite of Goldilocks is. Yeah, there is an opposite to Goldilocks. But
what is the opposite of Goldilocks?
Oh, that's a good question for everybody. But if you, conversely, of course, if you've got wages slightly weaker, but job growth remaining okay, that I think the market would be inclined to take a very positive view. And there's a lot of money that came out of US markets. I think there's still a lot of money that wants to go back in again if this rally keeps going. Because the longer it goes on, the more people go, oh look, I've missed out on this 10%.
You've got, if you quash people's FOMO, then the market stops going up.
Yeah. If it continues just to drag stuff back in, people go, oh, why are we out of US? We need to be back in US stocks.
Yeah.
So that could just drag it back in again.
Although, stuff like Friday just proves that he's hell-bent on destroying momentum in the meantime. And he's happy enough to come out with these.
Because you kind of think that taco stuff rankled with him now, because someone asked him, what was it, Wednesday was the press conference when someone asked him about it?
Yeah.
I think.
Well, we definitely saw it Thursday morning.
Yeah.
So yeah, Wednesday evening.
It was a nasty question. It's the nastiest question. Who was very unhappy. So you can kind of guess he's been mulling over that for a good couple of days.
Yeah. I've got to watch when I ask you what's the opposite of Goldilocks, because whatever you say could end up on New York Times.
It's in front. They're probably in front on his desk.
They're probably watching.
circle with the big highlighter. Yeah.
Right, let's have a look at the S&P earnings there. Right, so we've got those earnings expectations, 275. You can see that is the red line. And then we've got leading economic indicators, that dotted line there. And that is what the hesitation is about. That's what the fear, the caution. That is why Jamie Dimon is coming out and aggressively saying, look, we could be seeing some real nasty stuff coming up. So, you know, why is the market so
blasé about it?
Yeah.
It's trading like it's all fixed, I think, is the key risk.
Yeah.
Before we've really seen any data. And if you get a bad set of data this month, and then earnings season starts again in July, JP Morgan is mid-July.
Yeah.
It could be sort of the 1-2 punch, really. The economic data comes in, and then the earnings, suddenly people are coming going, actually, no, it was worse than we thought, and the outlook isn't great either.
Yeah. Now, of course, we have had guidance from the Fed. No rate cut until September now. No rate cuts until September. So, you know, it's going to take quite a lot for them to bring that back a little bit. And yeah, so that leads us in. So if we're on 275, right, that is what the market's telling you on earnings. Let's go back to Boise's favorite chart. It's, of course, my S&P 500 EPS matrix, right? Now, forget the headings, right, because those are kind of redundant now. But if we're at 275, what do we multiply that 275 by? Right, now that's almost back to the January bullish figure. So let's take that for now. At 21 times earning, 5,880. Where are we right now? Drum roll.
Oh, sorry, 5,870.
And that is why I love this matrix so much, because it's pretty much where we should be, really.
Yeah.
You know, 21 times.
Yeah.
So I'll take that. However, if you start to see the jobs numbers come lower, then that 275, that 280 is at risk. And that is why I would still be on the bearish side of things, because I believe, as I have done for 12 months, that 4.5% interest rates should have a negative effect on payrolls at some point.
Yeah, and if you look at where the yields are, you'd think the Fed should be cutting rates a bit more than they are. But obviously this fear of inflation returning is what's keeping them.
Yeah.
And probably the fact that Trump keeps going about the need to cut rates, because they had a meeting last week, didn't they? And I bet that subject probably came up.
Apparently they had a meeting.
Apparently.
Yeah, it felt almost like, you know, 2-minute chat and then, right, just stick this
I saw him
out.
in the corridor.
Yeah.
How's things going? Fine, thank you. If I was Powell, that would be how I'd do it. You know, try and just keep walking.
Now, what can lead us to that higher number there? And that was Mohamed El-Erian's positive. He had 3 things that he was worried about, but he had 1 positive, and that, of course, is the uplift in productivity from artificial intelligence. So all of us that use ChatGPT to get through those mundane tasks, those repetitive tasks, you are seeing an incredible uplift in productivity from those. And that's where you get that 6,160 to 6,250 kind of number, because the opportunity for 2026 earnings to be higher is quite great from that AI benefit. But that also leads to job losses.
Yeah. But there's never a simple sort of read on this, is there? That's the key thing.
No. Right, so let's, before we hand over to the mighty Matt Arbar, let's just quickly check where we are leaving the Hang Seng. That is the real recovery of the day. That's the 2-minute chart on the Hang Seng. You can see, as Chris Beecham first reported when we came on air, you saw a fantastic rally. That rally actually went through the high point from 2 a.m. So, but straight back down there. Let's see how that progresses during the day. Let's see how the S&P progresses during the day. And our final take on the top of the leaderboard in the UK is, well, looks like it's Fresnillo. Aberdeen, Fresnillo.
Upgraded by Goldman this morning, Aberdeen.
Nice.
Need to get that changed because it's not Aberdeen anymore. It's got vowels in it again, so we need that changed.
Let's see if there's what's at 900. Monkey Man's already checked for us, and he only found HSBC. So yeah, we're
Scottish Mortgage.
Scottish Mortgage is a bit aggressive. Well, we could have a 2-week target.
Now you're moving the goalpost.
Yeah, let's go a 2-week target on Scottish Mortgage Trust. How about that? So we are aiming for 975 subscribers by a week on Saturday.
Exciting.
I think we can do that.
A week on Saturday. Now, what are we at now?
Right, 2-tier Kier saying the DAX is going to collapse. Let's see. But coming up next, Angeline's back. Woo! And Matt Arbour joining her in 2 minutes' time. And yeah, we'll see you. Oh, Burberry. Burberry. One last check on Burberry. 10, yeah. Maybe the week after Burberry, Monkey Man. Unless he clearly thinks that Burberry's going to collapse. Good stuff. Right, see you in a couple of minutes.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favorite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
trader friends, welcome back. Buongiorno. I'm so pleased to see all of you, and of course, Matt Arbour.
Morning, Ange, full of Italian joys.
I am just telling you the sun, the food. I mean, it's, you know, what is there not to like? It was just amazing, and Milan was incredible. But when Rich goes there in just a short few weeks, and I'll be holding the fort here, he is going to need a rash top because boy, is it boiling! It's so hot, it's unbelievable.
Do you know, I think Rich responds to the sun very well.
I think it was even too much for me, I have to say. And I grew up in the tropics.
Okay.
I was born in the UK, but I grew up in the tropics, and even I felt kind of. But speaking of which, the markets.
The markets.
They've been doing very well.
Yes.
Considering the taco conversations that I was hearing throughout, you know, watching sort of Italian television and hearing about taco, hearing, well, what is all this taco about?
Wonderful acronym, isn't it? It's great. It's
Just
something to get excited about in the market.
Just remind everyone, have you seen the memes that have been, you know, going through the web? Let's have a look, whack them up here so that Matt can also have a look. Have you seen that one?
I'm not big on memes, so no.
But you know, it's quite a number out there. Those are just a selection. But you know, they don't seem to have you know, scared the market much. And last week they've still made good gains.
Well, yeah, it's an interesting one. I think me and Rich discussed it on Thursday, how equity markets seem slightly disconnected from what's going on elsewhere. If you look at the bonds, look at the dollar, you know, we saw in the initial strong equity rally, we saw the dollar strengthen again, euro turning back towards 110, dollar yen back towards 150. That's all changed last week. The dollar again much softer as equities were going higher and bond yields were pushing higher. So sort of different mood music in different parts of the market. Perhaps it's the froth still on equities rather than sort of something telling you a bigger picture.
And with the dollar, looking at the technicals here, this is the daily chart there. It is, you know, below that Ichimoku cloud there. It was also very, piqued my interest whilst I was there. I took an EasyJet flight and they're giving away free FTs, right? So I picked up one. So I don't get out much, people. So I picked up one. I was very curious to see that, you know, there's a lot of talk about this global euro moment. You know, now's the time for the euro. You know, maybe the ECB, Lagarde and team should look at, you know, using this moment as an opportunity to make the single currency the viable alternative to the dollar. What do you think of that?
Be careful what you wish for, Christine. Yeah, I don't think Germany would be too happy with a stronger euro as a reserve currency. It's almost the same. Trump kind of wants a weaker dollar. He believes in exports, but he believes in using the different stick of tariffs. He doesn't just want it to be everyone buying American goods. He wants revenue raising as well with the tariff part. It's a sort of multifaceted strategy from Trump. Whereas, you know, you end up as the reserve currency for the world. You end up technically with a stronger currency. Germany's success over the past 20 years has been largely based on it not being Deutschmarks in 30 years, hasn't it? Like the Deutschmark was incredibly strong, the euro less so. And it's been boom time until now, perhaps, for Germany.
Yeah, and Germany wants to sell all those cars, the machinery, robotics, right? It's only going to be more competitive if it doesn't have a stronger currency.
So it's a good thing to talk about, Christine, but does anyone really believe it? No.
I don't, and also the fact that she might be moving jobs in not too distant future. That was the other thing as well. Apparently the World Economic Forum is
I was going to say, what's next on the gravy train?
She's done very well, it has to be said.
She has done very well.
Done very well. Plum jobs after plum jobs. Speaking of which, let's have a look at the dollar versus the yen, since we're on currencies, because we've got loads and loads of trader friends. I know a lot of you like the yen versus the dollar, that particular cross. Adding that to my workspace so you can get a better view there. Thank you very much, Cam and James there, picking up the slack as producer Phil is somewhere else. I hope he's listening in because I'm saying this to wind you up, Phil. Taking a look at that and the technical viewpoint there, it is below the cloud and hanging around that base of 143 to 146. This is on the daily, people. Of course, the high on Friday was 144. It's come below that now. Any further down there would imply further bearishness. You like this cross in terms of?
It's
weak.
one of the great ones, isn't it, Dolly Yen? It either does nothing or it's doing everything. There's very little middle ground. You get some fantastic range, or it's like watching paint dry. It's at the moment you've got to be watching. It can be like watching paint dry. It can be like watching paint dry. At the moment, of course, you've got to keep track on both sets of bonds with Dolly Yen. It's a lot of what's happening in Japan. Finally, we've seen shoots of inflation in Japan. Japanese government bonds becoming more interesting, kind of the play that if you start picking up yields on JGBs, that they'll take their money out of treasuries, bring them back onshore into JGBs, and you see that shift in Dolly Yen. So there's sort of some good macro stuff to look at if you're trading Dolly Yen.
Yeah. Speaking of which, the Trump doubling down on steel, aluminium tariffs to like 50%, effective June. The 4th, 2 days away. 2 days.
Will that become 90 days? Who knows?
Yeah. Is this Taco Bell again? Are we going to see Taco? Yeah, June 4th is the new date there. Monkey Man saying, and talking robotics, what about Tesla's new Tesla bot? And will you be getting one? Wasn't that an interesting?
I thought they were all going to Mars on the Starship.
Yeah, we're going to send them there. He's going to send them there first because the radiation isn't good. Bode well for us, right? Apparently, anyone going to Mars will have to live underground for, the foreseeable future because the radioactive waves above ground means that it's not going to be possible. We're going to be fried.
Okay. I wasn't planning my trip to Mars. You just put me off even more.
Well,
a rash vest won't help me, yeah?
No,
Okay.
a rash vest won't help you. I'll be in Milan. You got, but back to that, wasn't the robot a big sort of PR scheme for Musk because he had a person dressed.
He had a person dressed as a robot, yeah. The obsession with making robots look like humans, because that's kind of where people have C-3PO in their head. Why would you have R2-D2 when you can have C-3PO?
Exactly, yeah.
Even though we all know R2 was the better robot. There's
There
one
you
for
go.
the chat. Who was the better?
There you go.
Who was the
Here's a
better
poll.
droid?
Who was the better droid? Clearly, the studio, everyone's rooting for C3. But we all know, it's not past the, nighttime watershed yet, but we all know why, humanoid robots are. But that's a different discussion altogether. Let's go back to WTI, taking a look at, let's look at commodities now, because oil is very interesting from a technical viewpoint as well. Whacking that onto my workspace for you. This is the trajectory of oil at the moment, up 2.3%. And because of that news, this is after that news that, US operating oil rigs fell for the 5th week. OPEC Plus saying they're going to hike output. That the market seems to be just, ignoring for the most part, because I think a lot of that was baked in.
Yeah. And it's, crude. We're still kind of waiting for the softer crude price to affect the price of petrol at the pumps, aren't we?
Yeah.
It's not really come off in the way it should do. But yeah,
It never does.
The way it never.
Yeah, especially in the UK, it never does.
Never seems to.
It does if you live in an oil-producing country. I can tell you that, but it never does here in the UK.
Yeah.
For reasons that we know, most of it is tax. But in terms of technicals, I'm looking at the two rectangles that I've drawn for you there and put the number 1 and the number 2 there, because if we do see some support coming through, we are seeing this coming through the middle of the Ichimoku right now. Ichimoku, of course, is a forward-looking indicator. It should not be used on its own, so that's why I've got the volume chart there, as well as these rectangles to show resistance and support If we see price action cross through the area of interest of that rectangle, which is the first one, and breaks through that, then we could see the price action head towards number 2. But at the moment, we're still stuck, mired in the middle of that.
Long way from that rectangle.
Yes, a long way from that rectangle. Gold.
Gold, yeah.
Oh, yeah. I was watching gold by the poolside yet again. Don't go out very often. And crypto as well. What was happening with crypto? I wasn't
What was
completely-
happening? That is, yeah,
Across crypto last week.
excited again,
Oh.
crypto.
Was that all down to like kind of risk premium?
It was all down to just, you know, crypto felt like going up. There's never any bad news in crypto. I say it all the time. Everything's good news in crypto. There were more, of course. Trump had his crypto bro conference where he said absolutely nothing to all those people who bought the Trump coin. Said something like, crypto's really great and you're really smart, and then flew off again. And poor money spent on your Trump meme coin, perhaps to get your moment with Mr. Trump. But remarkably, Bitcoin went up after it again. Digested Trump saying nothing. Of course, that means he loves crypto, doesn't it?
Yeah.
So it's one of these that nothing can make it go down, really.
Yeah, Cucumber is almost always right. Loving loving that. I'm going to steal that. Elon Musk increasingly resembles a modern-day snake oil salesman, a car salesman. It's a truly life-changing...
Oh, good
Whoa!
Lord.
Wow, K9 Doctor.
Who bought K9 into it?
Was that you, James? Was
I'm
that
not
you?
sure. I'm not sure.
R2D2 C3PO.
Um,
Oh my goodness me. K9.
K9 never even looked like he could get up a stair.
No.
At least R2 felt like he'd do something with his
Is
legs.
K9 the one that looks like it could be a really big Hoover?
This the
small
dog,
one.
the K9.
Ah.
K9, come on.
Oh, well,
Back
I
in the
was never a
70s,
doc- I
they
was
rule
never-
over.
I
over
was
those
never a
times.
Doctor Who fan, so I'm more like Star Trek and, yeah, Star Wars.
When he-
Aaron's still saying, we're going to educate you. And after this, yes, please, I don't know what K9 is.
No droids in Star Trek. Am I
Uh,
right? I'm never a big Trekkie. I'm going to say we're more.
No, and no seatbelts.
Vulcans, no,
Clearly. They
no.
always got like, how often does that happen? Speaking of which, I wasn't just checking crypto for no reason. I'm just whacking up my chart in case you guys missed this. But, this happened whilst I was away as well. And you can now take your positions on this brand new IG product. There are the details for you. Speaking of which, back to gold, and also taking a look at gold because we have broken resistance, people. You heard me talk about this before. I went on holiday and I said that if we break through that resistance of 3,300, look at the golden line there, people.
Golden
then
line,
we
back up.
are, back up. The game is on for upward momentum here. If we break through that 3,300, and we did, and we are now heading towards that point of interest, which I've outlined with that rectangle box over there. Now, if we break through that area of interest, then the next point of interest will be that high seen back where my cursor is, 3,437, and a breakthrough above that will take us to that 3,500 mark. We are way off from that yet, but
I suppose it doesn't require much of an equity sell-off for gold the way it's been reacting to get back there. If we think we're back above 3,300 after a strong week.
Yeah. After a strong week, and also we've got plenty of risk events coming up that could help it higher, right?
if that's what you go for.
Yeah, I mean, June 4th, June 5th, every day now. So let's have a look at drones. We talked about drones earlier on the chat.
Drones.
Actual drones, not droids. Drones.
You prefer your drone to your droid, don't you?
I do prefer my drones to my droids. And since I've just come back from the homeland of FinMechanica, really agree with many of the people who very cleverly on the top of this thread, if you guys go back up, if that's possible, we had, I think, Andrew McKilvey, R. Saxena, all talking about how the new future of warfare Away from numbers, saying the UK should be buying drones, not more submarines. Exactly.
Well, this is true, isn't it? It's always good to announce new submarines, isn't it? Because they never get built, and it's kicking cans down the road. It's like the whole nuclear strategy in this country. It's a long date, say you're going to do something, never happens.
But they can say that we have been seen to be.
Well, quite. If you say you're going to
Talking
move
the
into
talk.
drones, you expect to get them delivered
Tomorrow.
You know, yes,
By
tomorrow by Amazon. Yes. Whereas your nuclear submarines, you know, I get too political here. Your Scottish shipyard's not going to build them very quickly, is it?
No, but I can tell you where you can get one very quickly.
A
But it
nuclear
might not
submarine?
be working. No, as in like
Okay.
a submarine. You can find one in Portland Harbour, and it's propped up. It looks like 10 people could possibly 10 strong people like Matt Arbour could carry this thing away. But I highly recommend.
Portland Harbour, near the lighthouse.
Not far from the lighthouse, actually. Good knowledge. Yes, there is in Portland Harbour itself is where they tested submarines.
It didn't go very
I
well.
didn't go very far, but have a look. There's
That was the
one
nuclear strategy.
that is above. I mean, it's all it's a part museum now. But
Well, of course, but with drones back in vogue, the Ukrainian strike is to be believed, taking out the vaunted long-range Russian nuclear capability with a set of drones.
yes, yes. So that is why Matt's hit the nail on the head. It's all about those companies that also sell anti-drone systems. And I'm going to whack up my watch list here for you. This is the drone watch list here. You can see the big names: Lockheed Martin, Boeing as well. I'm going to zoom in for you if I can. Yeah, here we are. For those of you that have negative 800 eyesight like I do, Northrop Grumman, Thales, Red Cat Holdings. You hear me talk about this quite a lot because they sell modular drones. So if one of the propellers get taken out, you can just 3D print one yourself, put it back on, right? And then you don't have to wait for that Amazon delivery in the middle of Ukraine. RTX Corporation, Iron Saxena. I'm sure you know this one. I hate it. I hate it when they change names of companies. This, of course, is Raytheon.
Oh, okay.
Yeah, Raytheon.
Gotcha.
Which is now
Well,
RTX.
so changing their name and not putting anything about Bitcoin mining in it. That's mad.
And those of you that are keen fans of investing or watching this space and you trade this space, the key acronym to look out for is UAS, Unmanned Aerial Systems. And so they do lots of tests and a lot of strategies and studies get written up about it. And Palantir, obviously. Let's just get that up for you.
Well, Palantir had a very interesting day on Friday, didn't it? It sort of outperformed the market hugely, and it was kind of hard to ascertain the news at the time. I think it was looking this morning to do with being the White House's preferred partner in general AI stuff, I believe. It was a bit sketchy. That sounds a appalling piece of research from me there. But yeah, Palantir was up about 7% on Friday against the rest of the market. As you saw Nvidia come off after its good results on Wednesday, decent pop, and then downwards traffic from that point on, which was interesting price action. I'm not quite sure what the market was hoping for more from Nvidia.
Yeah, Nvidia was one of the highlights of last week, along with Costco as well. But I'm just getting Rich in my ear about Palantir saying that is it Barrett, Rich? Yeah, Barron's saying, and Rich is mentioning that Barron's having a negative. Is that right?
It's good TV, this.
It's very good TV. We get live news, live updates from Rich. Yeah, it's been reweighted, so that means that this could, have further downside for Palantir.
The downside, well, they say obviously Barron's got it wrong then, because it was up 7% on Friday. It completely outperforming the market.
Only came out the weekend.
Oh, it came out the weekend. Okay. What goes up must go down. Barron's still got it. A Bible of investment. Good Lord, they've been churning that crap out for ages in Barron's, haven't they? Oh, dear.
Right. So let's have a look at the stock right now. Palantir currently
not yet open.
Not yet open because
but an interesting
7 minutes away, because this is all sessions, of course, trader friends here. This is what I love most about the IG platform. the all sessions stocks let you get, in. So we're going to mark that 13103 to see whether the Barron's effect has any impact.
But looking at where that price is, if you look at on that chart, there are not many names you're seeing where we're back above the peaks previously seen. Certainly in tech, which is, I'm not sure I'd have picked Palantir as the post sell-off champion, but there it is in reality.
Yeah. So it is, in terms of a trend from beginning of April, still a strong upward trend there, and of course, way back. It had that big correction from, Valentine's Day, 14th of February, down to April, but it has, really bounced back. So we will see in just 5 minutes' time. Andrew McKilvey coming online. Hey, Andrew, good to see you after my week in Milan. And MSI sell anti-drone guns as well. Taking, you mean MS International? We've got James in my ear. We're going to go to a quick short break after I show you this chart here, because we are going to come back with all sessions, so stay with us.
Right, producer Phil. The core PCE always comes out at 1:30 p.m. Producer Phil is now arguing that the core PCE is at 3 p.m. The core PCE has never been at 3 p.m. in its existence, producer Phil. If I promise you that the PCE inflation is at 1:30, and I will bet my life on it. No, you're not right, producer Phil. You're just right that Trading Economics calendar has it wrong. Ooh.
I'm just looking this up now, and I'm searching core PCE, and Nick Timireas of the Wall Street Journal, who's known as the Fed Whisperer, he says the PCE price index bracket's due at 10 a.m. on Wednesday. So I think they might have moved it. The plot thickens, as they say.
I am lost for words.
.6%, it's just, let's have a look at that, and the other sorry, come again?
We just had Rich there. I think you might have missed it.
Was he photo
He was
bombing?
walking down some stairs that I didn't realise were behind the desk over here.
So coming up on today's show, starting in exactly 1 minute time, we've got Trump's big, beautiful bill. Is it going to pass through or not? We had Vodafone up 7% yesterday, Ronnie.
Didn't see that. I was on holiday, mate. Doesn't count.
Join us.
For those of you trading the ride-hailing space, it's all about...
They showed me the canine during the break, and dear Lord, it looks hideous. Yeah, oh my goodness me, you weren't kidding when you said it does look like a dog. It looks like a rat, actually. Right, Rich is here because we're counting that 2 minutes ago because he wants to prove Matt Arbor wrong.
I'm putting my money where my mouth is. So yeah, Palantir. It was a decent article in Barron's. I do agree with Matt. So they've sometimes got it wrong, but yeah, there is a technical situation where Palantir has been a mid cap, and now from the end of June, I think it is, it gets reclassified as a large cap. So their argument is that you potentially get some selling from that.
Well, we will soon see. We got 1 minute to go, people, to all sessions. It's looking like a really risk off day here across the board. So any moment now. Do we still do the bell, Rich?
Oh, absolutely.
Oh,
Have you missed it?
not yet. 20 seconds.
No, I'm saying.
I've missed this bell. Yes, I have missed this bell. Right. Just a quick update. We are looking at quite a few earnings later this week, but not today, not just yet. 3, 2, 1. Right, here we go, people.
Right, let's get this.
Right, watch list. Here we are, all sessions. Right, off we go.
Zoom in there, and let the people see what they're.
Got
what they're making
Moderna,
money on.
yeah, up 2.8% there. We got Lucid as well, up 1.8%, and Barrick Mining up 1.5% there. Oxy up almost 1% too. Novo Nordisk up 0.5%. Those of you that are still in Novo Nordisk, skinny pen maker, of course. And Chevron up 0.5% there, with oil prices, WTI riding higher. Let's have a look at the losers. Plug Power down almost 5% there, 4.9 now. And Affirm, this is the buy now, pay later firm, down 3%. Affirm and Klarna, those names have been hit quite hard so far this year.
Right, if you go to my screen, I am going to short Palantir. So here we go. So I'm going to start small. I'm only going to do 70, but there we go. So shorting Palantir for Matt Arbor, 129.55. Let's see how that turns out by the end of June.
Yeah.
So the reason I'm doing it is because I would like to, this is called selling my delta, because I want to get short in the options later on. So what I don't want to do is the stock be down 4% by the time I actually get around to putting the options trade on. So you can see, here we go, in Palantir, let's look to the July expiry, so that's 46 days away. So getting to the point where Sosnoff likes to trade. And something like, I will try and sell the 150 calls. $5, that's quite nice actually.
That's pretty good.
Yeah, I think I'll sell the $5 calls there for July. Sorry, the $150 calls, selling them for $5.25. I probably won't get that now that the stock's down. But yeah, that's punchy. Wow.
How often do you go with these suggested trades on the platform? We get many viewers asking this, you know, when you can actually hit the button where it's
this one up here?
yes, when it's already, you know, default for you. How often do you use that?
Yeah, I guess if I'm doing one, if I want to do it really quickly, then yeah, I would go, okay, so short vertical put spread, boom, and then it gives me it, and it's really easy to move there.
Yeah.
So anyway, so that's what I shorting a bit of delta there. When the option markets open at 3 p.m., well, about 3 p.m., I'll wait half an hour to see how it opens. Then I will short that call, and then I can buy back my short stock.
Take a look at Broadcom as well. This is obviously all sessions as well, down 0.75% at the moment. Broadcom, of course, one of the biggest companies reporting this week. Expectation is for a slightly higher print on its expected earnings. Broadcom, of course, related to hyperscalers as well. We also have Dollar General and Dollar Tree. Those of you that like US retail, we have those also reporting this week, and we've got also companies like Lululemon, Athletica. I think Rich talked about this earlier on. It is also all sessions down 0.25% at the moment.
Lulu. Right, let's have a look on the big losers there. Then you can see Palantir, the worst performing stock there, down 1.8. Tesla down 1.7. Yeah, Meta, all the usual suspects. Nvidia 133. I didn't think we'd see Nvidia at 133.
Or after the punchy earnings.
Yeah, I'm actually tempted to pick some up there.
Well, they are likely to pop if you see, of course, a deal done between the US and China, whenever that might be. And the fact that Jensen Huang
Yeah, I think we're far from that.
Yeah, but this is a waiting game here.
Yeah.
American Express also, down 1% there. US retail, one to watch if you are shorting, because there are concerns now that we could see further cracks coming through. GameStop, don't forget, GameStop also, for you gamers out there, those that like this, what was a meme darling, it's out with earnings before Friday's open. It's down a third of a percent there.
Nike back down to $60. So yeah, you had your opportunity there last week. 63.20 it got to when we said, I think that court decision against Trump is not even worth the paper that it was written on. So that was your chance to get out of some Nike. Now back down to $60. Apple back below 200. It was 207 on those headlines. And we've got Amazon just managing to stay over 200. Microsoft 457. Probably the best performer of May, wasn't it?
Yeah. I mean, the hyperscalers have done pretty well, and Apple, time to get back in, you think, or still?
No. Don't think so.
Let's have a look.
Don't think so. Walt Disney at 112. This thing trades 112 constantly. 109 to 113. I think it could be worth looking at the straddle there on Walt Disney. Maybe the sort of 112 straddle.
Yeah. And Walt Disney, if anything, it always, if you're looking at this from a shorting point of view, it has this very clear resistance at around 118.
Yeah.
It always fails to punch through. Always fails. It tries and then fails time and time again. I mean, yeah. James is like, this is great, both of you. It's like as if it's scripted. No, it's not scripted whatsoever.
Yeah, completely making up as we go along.
Walt Disney is, jokes aside, to me, a company still in pain. It's gone through a huge restructuring process. It's had to, restructure a lot of its top management, bring, the old guard back. But don't forget, they were late to the streaming game as well.
Yeah.
Right? So Disney Plus, not delivering on what it needs to versus the Netflix. It's a crowded space, which is now facing consolidation.
So if you want to take a bit of cash out of this free numbers, right? This is to expire 4 days before numbers. You can sell the 113 straddle, which pays $4. That's incredible. So that's, as Anne said, it's got some resistance there at 118. So you take advantage of that. I don't think they sell off aggressively into numbers. So you've got, $4. Sorry, that can't be numbers. I apologize. June 24th had something up there. June 24th.
Well, it's Rich is punching that up
dividend.
For you.
It goes ex-dividend.
I've drawn that line there just to show you where that clear resistance point is, and each time it tries but then fails to punch through that. So 118 is what I'm looking at.
Okay, shall we have a look at selling calls a little bit further out at 118 then? Unfortunately, they're not. They're only, on the monthly, they're only 115 and 120s. And the 120s you don't get much for. So when's the last? There we go. So July 3rd, we can sell a 116 and a 110 strangle, and we can pick up $3.30. I would be quite happy with that. So that takes us above your resistance point, and or you would be buying them at 107. I'm going to do that this afternoon as well.
Well, I think that's quite a good call, because I'm just taking a look at, you said 110, right?
Yeah, 110, because I want to be a little bit, because they've already had numbers, and the numbers were pretty good. They were up strong on numbers.
Yeah. Cool.
Right, I believe we've got a Martin Harris waiting in the sideline.
The waiting room. Jugger is saying setting up bull put on Eurostox 50 for June at 5250 to 5200. Brilliant. Away from the numbers, talking about Palantir as well.
So he is short a 145, 120 strangle. I'd be small worried about the 120, but I expect you must have been paid a lot for that. You must have got at least $8 for that. So that would make it 112, and that's more like it. Yeah.
Right.
Good.
We got Martin coming up next to talk about macro and what key events are up this week for you to trade. Do stay right there. Go make.
Should they subscribe?
Yes, hit the like and subscribe button, people, because we are wanting to stump up as many likes and subscribes as possible. The more you get, the more we get towards the Milan rash top that we're going to buy for Rich when he goes to...
What is a rash top? Is that like Rabsino's bit?
No. It's a top that surfers use, and you put it on, it cuts out UV rays.
Does it slim down my stomach as well?
It gives you a six-pack.
Oh, done.
But yeah, on that bombshell, he's going to come back with six-pack after this. Martin is coming up next, so bang all your questions in here, but also like and subscribe, people, to get us to that new bell that we're going to get if we get to that number.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome back. We are live with Martin Harris, and he is all suited and booted. Are you going for something special after the show today?
No, I
meeting,
specifically needed to come
dates.
to the show. It's all for the show.
I love
for
it.
you, for the viewers.
I love it, especially in a time when markets are pretty much, risk off at the moment. We have lots of cheers in the background over your suit. Trader friends, it's been a risk-off day after these new threats by Trump, these new tariff plans which have revived the global trade tensions. Are we going to see that June 4th date push back, do you think? We're going to see taco again?
So the taco situation is tricky, and I think it's something that we spoke about last week even, is that as soon as you make Donald Trump aware of where, that you think he's going to chicken out, he's going to do the exact opposite because he's just so stubborn. I mean, what we did see is that, we had that federal decision that the courts that they needed to stop using the emergency powers to introduce tariffs. That has been paused, so that's still running this week, but we don't think that that particular move is going to impact where the tariffs actually land. All that it means is that they can't use the Economic Emergency Powers Act to drive tariffs, and so really what that impacts is what we saw on the 2nd of April. So that day of liberation, those tariffs, that's what are impacted, and some of the fentanyl tariffs, or all of the fentanyl tariffs that we saw in January. So those are what are kind of being contended at the moment. However, they have other ways of introducing tariffs, and that is likely what we're going to see in the next few weeks.
Right, and that is definitely what's causing a impact right this moment. Just showing you, trader friends, my watch list, which I've made specially for all of you, especially those that asked, what is the impact, Ange, that you're seeing so far. Here is the steel. I'm going to zoom in for you. ArcelorMittal down 1% there. ThyssenKrupp also down more than 1%. We are also seeing a bit of a reaction, of course, across the wider markets. Risk off really overall. Just trying to get that here for you so that it's clearer. But you can also see this on your own screen. Lots of conversations by banks and comments by also banks about what this means going forward and how it's going to impact global trade. ECB, of course, the next big thing after June 4th, if we see Trump respect that date. ECB is June the 5th. Any expectations there for further rate cuts or rate moves this year?
So I think there's a global concern around economic slowdown. What we're seeing out of the Fed is, and it's going to now be something that they can't really avoid, there's expectations that unemployment rate goes to 4.3% on the dates that will come out on Friday. I saw a note from Citi saying that they now are expecting a cut every month, and if not, or at each meeting, and if not...
Citi said that.
That's what Citi says, a cut at each meeting. If not, they expect less cuts, but more aggressive. So instead of doing 25 basis points, doing 50 basis points. So we're expecting a small cut from the ECB coming up. And if not, something similar to the Fed, they might be waiting for that, and they'll cut in line.
We've also got OPEC Plus. We had the large output boost, putting up WTI for you. This was largely expected, trader friends, which is why you're seeing the oil, WTI at least ignoring this, OPEC Plus to hike output in July by 411,000 barrels per day. This is aimed at regaining market share as well, and to discipline over producers. We all know that producers they sometimes get slapped on the hand because they don't respect the instruction from OPEC Plus. But this is also hurting shale producers significantly.
Yeah, look, I think on the macro side, we also had a front loading of goods for manufacturing and exports. Yeah, so that helped to the US, which helped lift prices. We've also seen that the Middle Eastern countries have been building crude oil inventories ahead of sort of the increased fuel use in the summer season. On the geopolitical side, we've got risks continuing that provide a bullish support to oil prices, and that's against this kind of softening physical backdrop of, as I mentioned, that we had the front loading as well as higher inventories. So that kind of Russia-Ukraine conflict, which developed further over the weekend, that's showing no signs of resolution. Diplomatic channels have stalled. Donald Trump is starting to tweet about it, which means he must be furious. And we do have sort of US-Iran nuclear talks, which are inching forward, but that's, there's limited progress. We're not hearing too much out of that. So that's where we see some support for oil, given the increased physical supply. That's really the message that's coming out at the moment.
Yeah, and the names have come to me now. It's Iraq and Kazakhstan that have persistently produced above their quota. Do you share?
Yeah, there were voluntary cuts made by 8 members: Algeria, Iraq, Oman, Kazakhstan, Kuwait, Russia, supposedly, and Saudi Arabia.
Do you share Aaron's view? He's on here very often that we are going to still continue to see, flare-ups in the Middle East, and that is going to keep oil well supported towards the end of this year. There's always that risk, and I think that kind of geopolitical risk continues to provide that kind of support. So we don't want to discount the Middle East as now being risk-off in terms of geopolitics, and certainly, and again, that Russia-Ukraine conflict, which then impacts energy prices across Europe as well. Lots of chatter coming through this morning on our comments page. Please do hit the like and subscribe button. Just a reminder that we are wanting to get the LSE to sponsor our brand new bell. And if you like Martin Harris in a suit here, please hit like and subscribe, because then, we'll know that it's because of his suit. But Jugger saying, don't like longer time frames right now. Kind of feels out of control. I agree with you. And also, we are in a time, Jugger, that many of our clients are saying, and, I take stuff off on the Friday because the Saturday and Sunday are just a bit too volatile in terms of, Twitter action from Trump. We have lots of viewers asking about, how about Asian economies, especially emerging Asian economies? Aren't they going to also, cut their rates as inflation there cools, and also to kind of try and offset the volatility that Trump's tariffs are causing? Is this something that you factor in as well when you're looking at your portfolio going forward?
Yeah, so I think what we're seeing out of any of the Asian economies is that there are concerns around softening of consumer spending happening in the West, so a lot of these export-driven markets, as well as a concern around kind of fundamental weakening of the dollar. And so if you have a weaker dollar, you have less purchasing coming and a slightly weaker consumer coming out of the US, you have Asian economies that will reduce exports. And as well as the threat of tariffs. So there's all of these bundled together, and there was a front loading of goods supplied in March, so we're expecting a slightly weaker piece now. So central banks across emerging markets are anticipating this kind of deflationary environment almost, and are cutting in response to that. I think the one thing that we are seeing in terms of markets, we are seeing positive equity news around both reshoring and electrification. So one of the things that are coming out of the US budget is a tax deduction for domestic R&D as well as for property, plant and equipment. And the real change here for anyone who follows sort of accounting is just that what they're trying to do is allow CapEx to actually be, you get your tax deduction all up front. So you can claim 100% of the tax deduction in year one instead of having to depreciate your core assets over time. And that's going to drive a significant uplift in your internal rates of return for a lot of these big CapEx projects.
Right, because you're going to front load.
Exactly.
Yeah.
And so now you almost, instead of having to, you wait, the project is now actually generating an income when you only have to start worrying about paying it back. So you can take that deduction all up front instead of spacing it over years, and that's really good from a funding perspective. So that really just builds on this theme of like US projects around robotics, around data science, AI, all being really positive, and this kind of, it just gets stacked on top of things like the CHIPS Act that we've already seen. So very positive in that space, and there's a number of European companies like Siemens and Schneider that benefit from these projects. So that is where we're quite bullish at the moment. Other than that, markets have obviously run quite hard, and we're looking to diversify a bit further outside. So if we're looking at anything that isn't to do with reshoring or electrification, infrastructure, we're looking to stay very diverse and actually use things like capped indices, so that there's not a market weight where you have some companies that will be much higher weighted in the index, but we'll use more capped indices.
That's really interesting because, you know, when I was on holiday, they were giving out these, you know, free FTs. I can't believe I'm saying that in this day and age, but free FTs in the,
Amazing.
you know, everywhere. I mean, like you're going through EasyJet, it's like free FTs. I mean, like, you know, they're all 10 years ago, 15 years ago, it's all about the paywall, and here you are picking up FTs for free. It was
because they need to get to their clients who are going on an early holiday to Italy.
An impromptu holiday, yes. But that ties in a lot with, you know, Doge as well, because there was a really interesting piece about, you know, which are the sectors that are going to benefit most from Doge, right? The cost cutting there, and it's going to be, you know, the ones that can cut a huge amount of red tape and also health and safety. So apparently Doge is cutting all those jobs that are kind of like the ones that, you know, tell you about where the fire drill is, you know, where the exits are, what to do in an emergency, you know, all that training kind of like...
They do the mental health seminar once a month for you,
Yeah, that kind of stuff. And, you know, the sectors that will benefit from this: private space and defense, contractors, AI, obviously, right? Because not only do you get rid of all those people that used to run the training, you can now just use an automated AI software thing that you make people click on and do some test at the end.
Yeah, no, I mean, if you also look at I can give you the stocks that are not going to do well, or the companies. So if you look at that list of where Doge have, you can go onto the Doge website and you can see where they've saved money, and all of, like, you know, the likes of Booz Allen. So if the consultants and the legal consultants, they are not going to have a good time.
Yeah, and we've already seen that because you know, the Ernst & Youngs, the consultancy firms, McKinsey, they've all had to cut jobs, you know, recently. Some of them very painful job cuts. I'm sure many of you work in that space, and so Doge is predominantly doing what they used to do, right? They're taking what the BCGs, and there used to be a saying that if you saw any one of those big 6 consulting firms walking around your office, it's time to pack your bags.
Oh, right, okay. Walking around with a clipboard.
Yeah, clipboard, tick, tick, tick. But those sectors, other than the ones I mentioned, right? So cloud computing as well, cybersecurity. So that kind of leads me to all the hyperscalers, right? The Amazons, the Microsofts, and also electric vehicles, which we touched on earlier, infrastructure. Lots and lots of Teslas in Milan when I was there. and I was fascinated by the fact that they haven't gone fully automated yet, but it won't be long. It won't be long because I was looking at the software in the cars. They've all really been installed. They just, haven't.
Right, the autopilots, yeah.
Exactly. And if you look at the software, it gives you way more information to have a safer drive than human eyes will ever be able to give you. I'm not saying that there shouldn't be drivers. I'm just saying that, that software is there. Construction and infrastructure as well. So Trump and co are very against wasteful infrastructure spending. And you talked about Siemens earlier. That ties in with the smart infrastructure. So all your smart climate, smart doors. Honeywell as well does a lot of smart infrastructure. And a company called Trimble, if any of you are avid and keen on the infrastructure trading space. Renewable energy and grid optimization. So the Oklo, the new scales, likely to really benefit from all this Doge red tape cost cutting. And education and workforce training. Apparently, like companies like Coursera, Udacity and Khan Academy, those that are using software and AI education. Right, let's have a look at some of the movers today because we have 4 minutes to go. It is pretty much risk off at the moment, not by a huge amount. We are starting to see a lot of these indices creep back towards the a neutral zone. FTSE is now up 0.2%, and the DAX, let's see where Germany is. It is still down 0.3%. Let's have a look at the individual movers here before we head to Axel. Axel's going to be with us up next, trade of the week. Germany 40. Here's a look at the gainers there. Do you want any of those names call out to you, Martin?
Yeah, Siemens just underneath, above and below Rheinmetall. So
Yeah, that's
Siemens
Siemens
Energy.
Energy.
So really liking the European beneficiaries of this kind of electric grid infrastructure type projects for EVs and for data warehouses, smart homes, things like that. So overall, that is kind of the macro shift that is supporting those markets, and that's what we really like.
Quick question about debt concerns. Before I went on holiday, huge concerns that the debt market, especially the long end, were flashing red signals, red flags. Stocks did surge in May, but bond markets still reflecting this rising risk and concerns over US fiscal discipline. Yields still high, dollar remains weak. You concerned at all by this, or do you think that liquidity will win out at the end of the day, and we're still going to see that the US is still the only game in town, and exceptionalism is still around, although tarnished slightly, and it's more sort of a rediscovery of other assets?
Yeah, there are concerns there, particularly in the short term. I think if we remember going back to 2022 when Liz Truss wanted to cut taxes in an environment which was not favorable, and yields shot up, and it resulted in a lot of pension funds almost going bust, and so we had BOE having to step in. The US are seeing something like that, not to the same scale, and certainly Donald Trump isn't going to step down, but there are concerns around US growth. They've got huge amounts of debt. How do they sustain the debt? I think without growing your way out of it, which is unlikely because they would require a big step change in growth, they are looking to weaken the dollar to achieve that. And then now that's difficult when you have this global dollarization, and as we mentioned earlier, in response to a weaker dollar, you will just see other markets weakening their currency in response. So difficult there. Potentially, we could see that 10-year head towards 5%.
Yeah.
But that is sort of what we're seeing in the short term, unless there is some way that they can boost real GDP.
And speaking of which, I believe it's Jobs Week again.
It is Jobs Week again.
Hey, swings by fast, doesn't it? You know, given all this, you know, the jobs figure, you expecting on the print number or slightly better than expected? With June right now, this is when I expect, you know, the inflation print to really start getting hotter.
Yeah.
Is the jobs number?
So May, go for it.
One that you think is going to royal markets, or is it just going to be like keep calm, carry on? July is the main figure.
I think this is the big one for seeing how the Fed starts to potentially cut rates. This is what I mentioned earlier. But May jobs report out on Friday. I'm expecting that it should point to a labour market that's softening. We're expecting job growth to slow to 120,000 from 177,000. And that's low hiring, which weighs on seasonally adjusted employment. May typically is you see a lot of cyclical employment based on the summer season into things like hospitality and retail work. But so we're expecting the unemployment rate to increase to 4.3%. And we've got risks tilted to the upside given the recent continuing claims reading. So that's what we're looking at. We've also got ISM manufacturing. That could increase in May, similar to the S&P manufacturing PMI. And I think that really is just reflecting the temporary boost from the front-loading activity that we mentioned earlier.
Right. And other than jobs, we also have, of course, Broadcom, and we've got a smattering of other companies in the retail side of things, and of course, GameStop on Friday. And we got Axel coming up next, so stay right where you are for Trade of the Week.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Good morning and welcome to Trade of the Week on Monday, the 2nd of June 2025. Let's begin with today's trade, which is to go long New York sugar. So let's have a look at the daily chart. And the reason I want to go long is twofold. Can you see here, if you go on this daily chart, you can see we've just broken through this accelerated downtrend line or resistance line. And we've done so from a low from last week, which was marginally below the early May lows, but also above this January 2025 low. And if I then zoom out, what you can see here is that all of these lows around the 1,750 area on the daily financial bed go back to basically 2022. And you can see here all these lows we've sort of bounced back from. So for that reason, I believe that we have another opportunity perhaps to see a recovery in the sugar price taking place over the next few days and weeks. So for that reason, I would like to go long New York sugar here with a stop loss below the January low. But I also was asked to talk about the previous week's trade of the weeks, and just want to mention that was last week's here. We went long the NASDAQ 100 here. We had an upside target around 22,000. I don't think I can count it. We went up to 21,800, but yes, you could have made about 600 points profit on that trade. If you haven't cashed it in, with what's going on today, maybe cash it in now. I don't know, it makes a small profit here of about 28 points or so if you got long perhaps, or just get out. But that one for me is done. And then the week before we went long cable, the British pound against the US dollar. You can see here we went long on the break of this downtrend line, this resistance line, which looks similar to the one we've just looked at on the New York sugar price. So here we've been long. We had a stop loss at our entry level at 133.60. Now we can raise that stop loss to a take profit stop to just below Thursday's low, which was 134.15. And thereby, if we were to get stopped out, we would have a small profit in play. And you can see here we're heading higher, and my upside target is still the same as before. If I zoom out, it's going back towards the 138.50, 139 area, just below the psychological 140 area here, because we've had a lot of resistance up there. But for me, the uptrend in cable is still very much intact. So going back to New York sugar, to today's trade of the week, what I would like to do is to go long New York sugar at around current levels with a stop loss below the January low, which on the daily financial bet was made at 1,683, and with an upside target probably around, a first upside target around 1,815, but perhaps it could go as far as the 2,000 zone over the coming weeks and months. Welcome back to Technically Speaking. So as you just saw here on Trade of the Week, I put on a trade which is against the trend, which I normally don't like to do. But the reason was that a lot of the other trades I looked at today are either correlated or inversely correlated, and we've missed already quite a big move. So for example, I wanted to go short again on the US dollar against the Japanese yen. You can see that here. But ideally, you wanted to go short here on the break of that bearish candle here on Thursday around 143.85 or so. Right now we're trading about a big figure lower. And if I put my stop above that high and have a downside target around 140, then the risk reward isn't really that great. So therefore I couldn't put this one on. Similarly, I thought about perhaps going long the euro against the US dollar, because you can see here, after all, we're still in a very nice uptrend. We're breaking through these previous resistance areas here. That is bullish. If we close above there today, we could then head back up again towards the April high and basically target the 116 area and above. So again, I would like to go long here, but if you look at my stop, where my stop is below Thursday's low, and that went all the way down to 112.10. So let's say we're at stop loss at 112, we're going long here at 114.12. So basically two big figures, and our upside target's just above 116. That's also two figures upside target. So risk reward is just 1-to-1. So for those reasons, I'm not comfortable going long. If you want to look here, for example, a spot gold price, similar pattern. Can you see here? We're breaking through a downtrend, or at least a resistance line. That is bullish, but we need to take out the previous high here from the 23rd of May for us to confirm this perhaps ABC correction in an overall medium-term uptrend, and then we could head back up again towards the record high $3,500 per troy ounce. But right now, as you can see, we've already risen by about 50 or so dollars. So to go in now, if you have a stop loss down here at 3,245, around 100 points away, if I'm trying to make just above 100 points here, yes, you could have had a slight risk reward, which is, you know, positive towards the reward, slightly being bigger than the risk. But again, I'm not so sure. So for those reasons, I chose New York Sugar instead. Now I've got questions here. Somebody saying they are aware that I don't recommend trades. No, I do not recommend trades. And as I keep on saying on this show and also on Trade of the Week, I personally do not trade a single one of these setups. Why? Because my setup happened earlier than 10 a.m. or 9:45 a.m. London time this morning. If I trade these setups, I'm already in basically. So I can't just wait for a single day and a single time every week to then come up with these trade setups. It doesn't work like that. So yes, I can't give you any advice. But somebody wants to know my opinion on going short the Nasdaq or the DAX. Well, I mean, the DAX, as you can see here, is coming off slightly, but every time we do come off, it's going up again. And you've seen over the last few months that European stock indices, especially the DAX, outperform US stock indices. So the DAX has made a new all-time record high, whereas the Nasdaq hasn't done that yet. So if you wanted to go short the DAX would be the stronger one of that pair. So perhaps it makes more sense to go short the Nasdaq. But let's first of all look at the DAX. If you go short here, you could argue, well, what's been happening is we're losing upside momentum, which is absolutely the case. As you can see here, if you had a support line here, we've broken through there. If you take today's low as a support line, it could be here. But basically, every time we come off, the next day we then go back up again. Here we had a slight decline over 3 or 4 days, but it was very mild, whereas the up moves are bigger. So the trend's still very much intact. But what is interesting now is that the highs seen last week, the new record highs here, have not been confirmed by higher highs on the relative strength index. You can see here my RSI setting is at 9 periods, so 9 days. You can see here that that high corresponding to the 27th of May high is below the high made on the 19th of May high on the relative strength index. So that's telling you that's negative divergence. When you've got that here, in this case you've got nearly triple negative divergence. We've got 3 highs here and you've got lower, no, this one was actually higher. So it's just double negative divergence. But that indicates in about 75% of cases that you could see at least a short-term correction against the trend. Now, we may already have seen that in the decline we saw on Thursday and Friday and earlier this morning. But if that's not the case, well, then yes, we could go back down again. But how far could we go? I mean, we could go to the 23rd of May low. There's pretty good support here. And we would need to take that out for us to then reverse our trend and go back down again. So if you wanted to go short, where's your stop loss? Well, the last reference point we basically have is the record high we made on Thursday, and that was made on this daily financial bet around 24,395. So you would probably have to place your stop loss just above there, let's say 24,400 for argument's sake. So that would be your stop loss, because that's the last relative high, a high which is higher than the one to the left or to the right. But as I said, the DAX is outperforming the US indices, especially the Nasdaq 100. So if you wanted to go short one of these indices, perhaps go short the Nasdaq, because what you can see here with the Nasdaq 100 is the same pattern, which makes sense, because after all, European markets do tend to follow US markets. And here, if you consider today's down move so far on the futures contract to have taken us below this uptrend line, perhaps you have a start of a decline, especially since, again, this high, which is not a record high, but that high, can you see here, was made above the 20th of May high. So we've got higher prices on the price chart, but on the relative strength index, we've got a lower high. So it's again showing us negative divergence. Now, again, it may already have told us about this upcoming reversal to the downside, and that might have been it. I don't think so personally, but that might have been the case, in which case, well, you need to place your stop above that high. And that high was made on the daily financial bet at 21,805. So you need to place your stop loss if you want to go short now above here. But if you want to go short, what do you want the market to do in order to be proved right on your view? Well, take out the last relative low, which was the low from Friday. That comes in at 21,028. But more importantly, take out the big one here before we made a new high here, at least several months high. And that was the Friday 23rd of May low, 20,670. Once you take that out, this potential top formation would be confirmed. And in that case, you could have a decline take us back down towards these levels here, or perhaps even towards these levels here. So that could be a possible scenario. But in both cases, whether you sell the Nasdaq or the DAX, you want to place your stop loss above the recent high made last week. Now, why that high? As I said, it's a relative high. Now, if you wanted to place it higher, you could do so. You could say, okay, fine, I'm actually going to place it above the all-time high here to give myself more room. But that also means that if you get it wrong, your stop is much wider. And if you then want to get a good risk-reward setup, you would have to really have quite a significant fall in the Nasdaq 100 to compensate for that increased risk that you're taking. So yes, you can go short, and yes, I'm not giving advice, but whatever you do, make sure you know where your stop losses are. Monkey Man wants me to look at Visa. Let's have a look at Visa and see what happens here on this share price. And you can see here, Visa, let's just always go back to the longest time frame we can look at. And we can see on the monthly chart that we are trading in all-time record highs. You can see this huge positive hammer formation with a confirmation above the hammer made in May. That is bullish on the monthly chart. On the weekly chart, it's bullish as well. We had a very nice reversal taking us to above the previous highs. That's bullish. Then we had a reversal lower, but we've held, which is totally normal to sometimes take some air out of an uptrend. So if we were to draw a trend line or support line up here, let's just make it thicker, because this to me is a proper trend line. Why? Because we've got 3 touching points. Can you see here? 1, 2, 3. So that's a trend line, not just a support line. And right now, what we could still see is what's called an ABC correction, where you come down again, have another leg down, and then go up. But it doesn't have to be like that. You can see here the correction we saw at the mid-April. That was just 4 days, and then we continued higher. So from a trending perspective, the fact that we've taken out that previous high on a daily chart closing basis is bullish. So basically, for me, this medium-term uptrend from April remains intact for Visa, provided we stay above the 23rd of May low, which was this one here. And you can see that low, interestingly enough, was made marginally above these highs of late March and early April. So previous highs can act as support in the future. That's exactly what happened here. So as long as that holds, this uptrend should be intact, and we should then take out that previous high and make a new record high. So how high can we actually go after that? Well, what you can do is put on Fibonacci extensions. And the question is from where do you take them? I mean, obviously you can go a long way back, but for it to make sense, you probably want to take the last big correction low. That was the COVID low here, 2020. You can see we had a very sharp downtrend and then a sharp reversal to the upside, then a sideways to downtrend and an uptrend. So if we were to put a Fibonacci extension on here, what we do here, we go onto our charts, we go onto a Fibonacci extension here, then we connect the lowest point from the last bear market, that one here, with the highest point of that advance, which was here, or if you wanted to, you could put it to this one. I mean, they're quite close, but let's just put it here. Actually, no, let's put it here because we had a lower low after this one. Because if we put it here, the lowest low with this one, and then after that we went lower. So let's just put it up to this point. Click, and then you take it down to the lowest point of the correction against that previous trend, which is this point here. And that gives us these Fibonacci extension targets. You can see here, at this point here, that's 100% of this move here from there to there. And this one here is 161.8%. And look, I didn't make this up. This is exactly what we hit on Visa just 3 weeks ago, or a couple of weeks ago. So it hit the 161.8 Fibonacci extension. So technically, it's hit a technical upside target. The next one is the 261.8, but that's a long way away. So what I would do in your case is do other Fibonacci extensions, perhaps starting from here to there and then take it up, or starting it earlier from this low to that high and then taking up from this high to see whether you get any Fibonacci extension clusters around these levels to tell you where the next higher targets are. Now, another question I've got is to look at Kering. Let's have a look at that and see what this chart looks like. And what we can see here is the opposite. We see a downtrend. We see a series of lower lows and lower highs. Now, if you want to be long from a fundamental point of view, fine. Where is your support? Where's your view wrong? So you can see Kering went down to this distribution area here, going back basically between 2014 and 2016. We had a lot of support down there. And that's what we seem to have held. So if you want to, even long-term, go long here, well, if you don't want to place your stop loss below the last reaction low, which was made on the 7th of April, the so-called Liberation Trump low here, then if you want a lower low, because it's a long-term view, then you would probably place your stop loss below this support area here, going to 2016 and 2014. And that low is probably the one going back to, if I look at it correctly, June 2016. So on the daily financial bet, it would be 13,658. So that would be the low here, where you could have a stop loss. But I was saying, why do you want to be long a stock that keeps on going down? It always looks as if it's bouncing back, and then you think, oh, now it's going to turn, and then actually the trend resumes. And here you can see we have a very clear downtrend. And we've had, in terms of weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive weeks of falling prices since February of this year. 2 weeks of bullishness, and then we had, another 4 weeks down. This chart is bearish. So, if you're bearish, good on you. Where's your stop loss? If you're bearish, I would probably put it above this last relative high, the 12th of May high, because if that gets taken out, it could be sort of ABC correction. We could perhaps go towards this area here, the 22,000 area, before we resume our descent. But as long as that holds on the short side, that's still bearish. If you're long, if you have a very tight stop, that would be the low from last week. If you want a wider stop, as I said, the April 7th low. Basically, the trend is still pointing down, as you can see here, as long as we remain below that 12th of May high. So, yes, that's the technical view. And then I've got another question on SLI. Let's have a look at this. SLI. Standard Lithium Limited. And here the story is slightly different. Why? Because we are now bouncing back on the short-term view. But let's go back onto the monthly view. And we can see that we are bottoming, aren't we? And the low in April was made close to the previous lows here going back to April of 2024. This support area seems to be really strong. Can you see all these monthly chart lows more or less in the same area? And we held there again in April of this year. That gives me confidence that we could actually bounce off that support area. And this is what has happened. We've bounced for the last few weeks, gradually going up and down. And then we tried to overtake these highs going back to January of this year. We did so on a daily basis, but not the weekly basis. Ideally, where you want to do that on the weekly basis. But on the daily chart, yes, short term, we're coming off again. But this whole chart does look pretty constructive. The only risk is that if this were to be a downtrend, perhaps this could be an A, B, C Elliott wave correction, in which case, and you go short, you have a stop loss up here, and the trend continues and you fall below these lows. That is a possibility because overall you're still heading down. But what negates that view possibly is the fact that we actually tried to take out these previous highs here going back to November of last year. They act as resistance at the moment, but we still remain above our uptrend line here going back to April of this year. And as long as we do, and perhaps also as long as we remain above the last important relative low, this one here, from here we went up to that low last week, and that's the low on the 15th of May basically for me at 215. Provided we stay above there on a daily chart closing basis, I expect this to be a bottoming formation and for us to eventually manage to break out of that bottoming formation and then to head back up again, maybe towards 360 area or so. So that chart to me is looking as if it's possibly reversing to the upside. And the question was, are we preparing for a breakout? Definitely, because you can see here we tried a breakout on Thursday of last week, didn't manage to do so, then came off on Friday. We have to see where we are today. But if we take out last week's highs, for me, that is telling me that we are reversing this downtrend, breaking out of the saucer pattern perhaps, and then we could head all the way back up again towards 360 or further up. Now, I haven't got any more questions, and if I don't receive any in the next 20 seconds or so, I'm going to call it a day. But yes, whatever you do with your trading, always make sure that you think about your risk first before thinking about the potential profit. Where is your view incorrect? Where do you place your stop loss? And then based on that, you can calculate where your profit target is. If that then makes sense from a reward to risk perspective, because your reward is greater than your risk, then you can put the trade on. If not, don't bother. There's always another opportunity, another day, or another market, or on another time frame. Thanks for watching Technically Speaking. See you next week.
Hello, everybody. We're back. Jenny, I'm so excited for this market measures. It's not even funny.
I know, our research team is amazing. I think Baby Shark put this one together for us, and it's one of our favorite trades, one of our favorite topics.
True story on all events, and we're going to let the cat out of the bag. It's the Jade, wait for it, Lizard!
From Skew to Success, Exploring Jade Lizard. So I can't wait to do a deep dive into this. Thank you so much to our team for putting this together for us.
I know, it's very, very, very exciting.
Yeah, definitely. All right, you want to jump right in?
Yeah. Okay. A Jade Lizard is a bullish strategy that combines a short out-of-the-money put and an out-of-the-money call spread. It is created to have no upside risk with a total credit greater than the width of the short call spread. How many times have you said that exact sentence?
Plenty. In the last, I want to say, I'm not going to say 15 years. I know we've been on air 15 years, but we created the Jade Lizard maybe 13 years ago. So in the last 13 years, a lot.
It's a neutral to bullish strategy, right? So yeah,
no risk to the upside.
No risk to the upside. It takes advantage of all skew. So this is a good. I'm very excited. And from skew to success, exploring jade lizards. So when we did originally invent this, Jenny, we weren't thinking skew. We were thinking, I'm done getting burned to the upside.
Well, okay, so this is kind of, I mean, skew forced the trade because we were tired of losing on the naked calls, right? We were in a bullish market and tired of losing on the naked calls. But even besides that, when you look at buying protection, those puts are so darn expensive. It's too expensive to buy protection. That's why most accounts you'll see have naked puts. It's too expensive to spread them off. And then to the upside, it's pretty cheap to buy the calls further out of the money. And so you're like, geez, I can buy a call for 30 cents, 40 cents, 50 cents. I'm not paying that much to buy a call and give myself protection to the upside, but I'm not going to give up dollars to buy that put and give me protection to the downside.
Right. So that's kind of where it came from. All right, let's go. I'm just looking. It's got 10 slides. So let's go to slide 2. I haven't looked at this yet.
Okay, other than the naked put call, most option strategies have either 2 or 4 legs. So why did we create this 3-leg strategy?
Because one benefit of using the jade lizard over other strategies, such as the iron condor, is it takes advantage of the volatility skew. I think you just said that, Jenny, but normal skew is as the price of the product goes down, the implied volatility gets higher and higher and higher in a normal skew. So by eliminating that, you eliminate the most expensive volatility option on the board.
So you'll rarely see us doing a jade lizard in a product that has really high call skew because you're not getting enough for the call spread. So if there's very high call skew, the call spread is too cheap. It's not worth it. It's like, oh, we're only getting 10 cents, 15 cents for this call spread. We're not even going to sell it. We're just going to sell that naked put because
and especially things like gold, right? So gold has a pendulum, the skew swings both sides in gold. So a lot of times it makes sense to be like, oh, I don't want any risk to the upside just in case it continues to go up. You really can't put these in those products.
It's not worth selling that spread. You're either going to sell the naked option or nothing because the spread isn't paying you. It's not worth the risk.
Right.
Okay.
Right.
All right. Next slide, please. Due to the skew, IV increases towards lower strikes and decreases towards higher ones. So that's what we were talking about. Buying protection to the upside is cheap. Buying protection to the downside is expensive. That's why we love naked puts.
And what's great is I've never seen them. I like this. I've never seen it laid out like this.
Right. So you can kind of see the strike, showing you the strike and the implied volatility and how as you move lower in strike, the implied volatility gets higher in the puts, lower in the calls. To the upside, as you move higher in the strike, the implied volatility gets lower. So,
yeah, that's pretty cool. I kind of like that. So you just get to range $3 stock.
Like the extrinsic value is the same calls or puts. So as you're going lower in strike, you're going to see the IV higher in both sides, and then when you're going up, you're going to see the IV lower on both sides. So it's not like the calls are independent of the puts. The extrinsic value is going to remain the same, calls or puts, same strike.
Same strike. That is true, and I'm glad you bring that up because it is. That's just call put parity. The extrinsic value is identical. Okay, let's go to the next one. This means that further out of the money puts with a higher IV are relatively more overpriced than the puts closer to the stock price with a lower IV. All the calls are relatively underpriced with an increasing stock price.
Right, so the calls further out are cheaper, lower volatility. So, I don't know. It's interesting. Doing the jade lizard, we weren't like, oh, because of volatility skew, we're going to create this strategy. But it just made sense.
No, but after we created the strategy, I remember Tom Preston being like, you guys are so smart. You created a strategy that takes advantage of volatility skew. And I was like, yep.
Right. Funny.
For sure. Right. But it does. It makes sense with the skew. All right. Let's go to number 5.
All right, so the jade lizard sells the more expensive call and buys the cheaper one and doesn't pay for the more expensive put as the iron condor does. And
Baby Shark did a great job with this because it's very well laid out.
It is. This is like a deep dive into the jade lizard.
The problem is you and I keep trying to talk about it before the next slide comes out because we're so used to talking about this without these slides.
But you know, it's good. It's explaining to people why, what's the point of the jade lizard? Why choose that strategy over an iron condor or even over a strangle? Because oftentimes, if you're going to go with the strangle, you could look at some calls out of the money and see, well, I'm not giving up much to give myself protection to one side. And then when you have defined risk on one side and only the naked option in one direction, it gives you more of a fighting chance.
It does give you a fighting chance. And what we've seen, and well, you know what, even looking back at what we did with Jamal, where you had those, the height and implied volatility in that graph, you can see that. So every dip has been met with, depending on how long it is, it could be a longer time, has been met with upper. Like the S&P is higher than it was in 2008. The S&P is higher than it was. It's a constant up move. And this eliminates that risk of you losing to the one side, which I do like. But yeah, as far as volatility goes, what I love here, the put has a 31, the one you're selling, and you're selling, the one you're buying has the lowest, it keeps getting lower and lower and lower as you buy that call.
Mm-hmm.
Okay.
All right, perfect. Next slide, please. All right, here's the study. Good. We're getting into a study. Unlike a strangle, jade lizards also eliminate the possibility of unlimited risk to the upside, but with some positive delta. Let's take a look at some P&L numbers. So upcoming tables, SPY trades 2010 to present. So we've got, 2010 to 2025. We've got lots of examples in this study.
That's amazing. Okay, so let's get to it. Number 7. I think
I'm kind of curious. Okay, here we go.
The 3-leg jade lizard performance is somewhere between a strangle and an iron condor. Okay, so you've got a $10 wide jade lizard. Okay, that's good, because if you're using SPY and you're using like 30 cents, 70 cents, that's a snake oil salesman. Those numbers look so good because it's a dollar. So they're doing a $10 wide jade lizard.
Rarely done at $10 wide jade lizard. I know we'll do, so then that's the other thing. Like when we do iron condors, yeah, we quite often do a $10 wide iron condor. When we do a jade lizard, we rarely do a $10 wide jade lizard because you have to bring your put so high in order to collect that $10.
You do.
So it's interesting. We'll have to see what the next slides are, because typically the widest jade lizard I would do in SPY would be maybe a $5 wide.
So I'm just, while we're looking at that right there, I'm just going to glance at my platform, but you're right. So we usually only do a $5 wide, and I'm assuming, they did say they were in SPY, right?
Mm-hmm. Mm-hmm.
So if you're going to do a $10 wide.
If you're going out to July and trying to do a $10 wide, your put, what's the delta on the put? It's going to be crazy.
It is going to be crazy. So you got to get about $8, 30 delta. It's not that bad.
30 delta. Well, honestly, if you sell a $10 wide call spread and you're looking for a third, where's a put for $7?
That's what I'm saying, a 30 delta-ish, wrapped around. I mean, it's I just grabbed whatever call spread. I got 30 cents on, so I just changed the numbers. Instead of, 70 cents, 30 cents, I got $3 on a call spread and about a $7 in a put. You're looking at like a 28, 27 delta, just around 30.
Okay.
Which isn't that bad. Okay, so just calling apples to apples with what we were doing up there. So here you've got a $10 wide jade lizard. So the win ratio is 78% versus a $10 wide iron condor. Okay, so your largest loss, it should be very similar to the strangle. These should be the identical losses.
Well, no, because they're doing a 1 standard deviation strangle. So if you're selling a 30 delta put and they're at a 1 standard deviation, they're selling a 16 delta put. I think to do apples to apples, you have to have the same short put as the strangle and the jade lizard.
Well, I'm surprised because this does look like it's the same short put with that loss number right there.
Right.
Unless they're not covering with the strikes, unless they're going with, a 14 delta, a 16 delta put, and then coming up and doing a very close $10 wide.
And I will say that I have done many studies on the jade lizard, and what I found, and I've seen the Jade Lizard beats the Strangles with about a 16 delta put and maybe $2-3 wide call spread. And I've seen results where the Jade Lizard outperforms the Strangle in that scenario, but I don't have a $10 wide call spread and I don't have the 30 delta put. So
now I'm making extrapolations here. I'm assuming they're using the 16 delta, and then if you did the right on top $10 wide, you're collecting over $10. So they might shift this to be bearish.
Oh, really?
Yes, because if you use the 16 delta put, which I'm extrapolating here because of that max loss, and I do the right on top, the 590, 600, you got over $10.
Okay. But we wouldn't do that. So we'll see. And you know what? This is something that we could springboard off of and talk to the research team and see and maybe make some tweaks to the study and look at the study again with some tweaks on the trade.
Yeah, we could, for sure. Okay.
Slide number 8, please, John. Okay, Jade Lizards have a high pop, but its performance is very close to the naked put. So why trade it? Again, I'm not 100% sure like where so he's saying 30 delta. Yeah, so he did 30 delta put versus 30 delta SPY put here. But again, where's that call spread?
So yeah, but that 30 delta was what I pulled up originally. A 30 delta put with a $10 wide call spread was pretty far away. If you have the 16 delta put with a $10 wide call spread, it's there. But the 30 delta put was great. The $10 wide. It was $7 on a put and $3 and I went to the expected move. So that makes sense.
And if you're looking at this, if you're selling 30 delta, I'm just selling the put because the results here, win ratio is worse on the Jade Lizard, average P&L worse on the Jade Lizard. So if I'm looking at this, I'm doing the 30 delta put and not even bothering. But that's not really how we set up Jade Lizards. Like we've never done a $10 wide call spread on a Jade Lizard in SPY. So I would say like I would tweak it. And again, everyone can use this back testing feature at home and test different spread widths, different deltas, and see kind of pick what they want to do.
Right. And we talk about this all the time. Sometimes we will just sell the put instead of a Jade Lizard. I think the fair comparison is a Jade Lizard versus an Iron Condor or a Jade Lizard versus a Strangle because a put is different. The put is the bulk of your Jade Lizard.
Now, can you tell me in SPY, the 16 delta put, how much is the 16 delta put?
I'm just in July. The 16 delta put in SPY is $4.20.
Okay. And
the 30 delta put in SPY. And the 30 delta put is 7 and change.
So I would do that 16 delta put and maybe a $5 wide call spread, or correct. 16 delta put and a $6 wide call spread, something like that.
Because that's kind of how you'll shift it because you want to make sure that and I'm glad you brought this up a couple times today. There's got to be some type of common sense slide. The market just turned around. We are now SPOOs are only down 5, which is crazy. There has to be some common sense slide. You don't want to add the call spread if you're not getting any credit for it, and you don't want to have too wide of a call spread, and you want to make sure you're getting something for the put too. So everything kind of has to make sense. But you're right. Our strike selection is definitely a little bit different than this.
And you want to make sure you've got some room to the upside. So if it can run up, and we know if you've got room to the upside and it runs up and ends up in the middle of the call spread, usually that Jade Lizard comes off for at least like 20 to 30%. And so again, I don't know when he's managing these. I can't remember if it said when he's managing these, if it's 25%, if it's 50%, if it's 21 days.
Yeah, no, and they might not be, but so let's go to the next slide.
Okay, because Jade Lizards perform much better by entering the trade in a high IVR environment, capping our losses on one side as well. And this makes sense. After a big fall in the market, I think that's a great time for a Jade Lizard.
And I mean, you even said that too with him. So like, I'd rather do a Jade Lizard. You don't want to lose to the upside if something continues to go up. And that's when you have the high IVR.
And so with the high IVR, the average P&L 30 delta Jade Lizard has better results. Average P&L higher, win ratio higher. So that's kind of nice. It's nice. It's a nice trade when vol is high. That means the market just fell and you're giving yourself that high implied volatility, but protecting yourself to the upside in case we bounce.
And that's when it's Jade Lizard City. Okay, so we have two things that we say all the time: Put City USA or Jade Lizard City, because puts are neutral too. So sometimes if you're getting enough for the put, you're not going to add that call spread. But it does. If you're looking at a Jade Lizard, if you wanted to sell that put with a little bit of inflated volatility, you don't think it's going to blow through anything, it's going to stay within a range. It does, because you're getting that put for, if you go to the 30 delta and you're doing a $10 wide, you're getting $7. You're essentially getting that put for 10.
Right. So it's giving you an inflated volatility on that put, and you don't have any risk to the upside. I do like them when the market's falling. That's when we're throwing in Jade Lizards. When the vol's low and we're at all-time highs, you don't see us placing too many Jade Lizards.
You don't at all. It's pretty funny.
Right.
And it's so true. It's like, which came first, the chicken or the egg? We all kind of get there the same way, but I like how they did the vol skew for us. Okay, let's see the last slide.
I do love this on the Jade Lizard, and the last slide's probably just the legal. Let's take a look at slide 10, which is usually just. Oh no, we actually have another slide.
Takeaway. There you go.
All right, skew is a key consideration in constructing a Jade Lizard.
And a Jade Lizard's performance should be somewhere between a strangle and an iron condor. Agreed.
A neutral to bullish strategy. Ideally, a Jade Lizard is deployed such that the total credit received from the short call and the short put is greater than the width of the upside call spread in high IVR.
Yeah, like it.
All right.
Thank you very much, Sahil.
Thank you to Maybe Shark for putting that together for us. Okay, we are going to take a quick break. We're bringing in Scott, and we're going to chat with Scott, and I believe we're also taking phone calls.
Oh, we're taking calls. I got my teams chat up. I can't wait to see it. 855-238-2789 or 855-BE-TASTY, but we're going to be back in 90 seconds.
The tariffs are struck down, or are they? It's Thursday, May 29th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in Chicago, in place of Dylan Radigan today. He'll be back next week. We're here with you for the rest of this trading hour, the rest of the trading day. Markets close at 5 p.m. Eastern Time. If you're joining us on the platform, tastylive.com, thank you for joining us. Come over to YouTube. Tell us what you're trading, what you think of this excitement and then letdown in stocks, although I suppose depending upon where you sit at the table, Ilya, you may feel that this day's price action was a little bit more beneficial. I did tweet out yesterday, dear media, stop baiting the president into putting on new tariffs to basically prove that he's not a chicken. And, well, a few people responded to me that, no, they really are hoping that he's egged on to put on more tariffs, and I assume they're bearish too. But the tariffs today, do they have a lasting impact? Maybe not. Stocks barely higher on the day, up by 0.01% in the NASDAQ, which is a far cry from where we were earlier when we were sitting up closer to 2% across the board. Elon Musk back to Tesla. NVIDIA beats on its earnings report. Not enough to keep this market moving higher. Bond yields are mostly lower across the curve. Gold and silver bounce back. Energy products, they leak lower despite drawdowns in inventories in the weekly reports. And ultimately, in the currency world, the dollar is a bit softer following yield, so maybe a normal day there. Ilya, I got to say, there is a dramatic change in how the markets were proceeding this last night versus today. As the Trump administration said itself this morning, this doesn't really change much of anything. They're just going to put the tariffs on for a different reason now. Is this a sign of exhaustion, this price action?
Well, of course they'd say that, but it's not so simple. They do have other tools. They do have other tariffs that are on via other tools. So without getting too crazy, there's the Trade Act of 1974 that they're using for some of the other tariffs. There's the Trade Expansion Act of 1962 that they're using for some of the other tariffs. All of those things require a long period of investigation and justification. So it would not be easy to do, especially if you had to do it across all trading partners at the same time. It's not impossible, but it could be done. The the Trade Act of 1974 allows the president for him to install tariffs of up to 15% for 5 months. So it wouldn't be lasting, but maybe in that time, the president can win on appeal, because obviously they've appealed the decision. They were using the IEPA, which is the International Emergency Economic Powers Act, to justify this, and this is what got struck down, both by the International Trade Court, as well as actually by a DC District Court judge. So there was actually 2 separate rulings on this that from separate courts that basically said the same thing, that you can't use IEPA this way, that it's unlawful. So in my mind, what all of this means when you look at the price action is sort of what Austin Goolsbee of the Fed, of the Chicago Fed, said today. He was speaking in an interview, and he said, well, this just adds uncertainty, because you really don't know now. If you'd been growing somewhat acclimated in markets to this idea that all of this is a negotiating tactic to ultimately wind up tariffs to something like a 10% floor, which is what seems to be coming out of the conversations with China, which is what came out of the limited deal with the UK, which is what's been kind of the baseline talking point for the advancing conversation with Japan. All of this seemed to basically now become completely clouded again. And if businesses didn't know, and if consumers didn't know what the tariffs meant and their problem with them as of mid-February and onward into the April panic was uncertainty, and the dampening effect that uncertainty has on economic activity, this is now more uncertainty for longer. So if we thought that the cliffhangers were coming in June and in August, or in July, June and August, depending on whether the 50% thing on the European Union was in fact paused, or if the administration would revert to implementing 50% tariffs on the EU on June 1st, because again, the president is being rage baited. If he was going to flip-flop on that again, which you never know, all of that now gets extended for maybe 5 months. So maybe now we're looking at October. And then there's the tax bill on top of it. So it seems like the markets have looked at this and said, well, now we really don't know anything. Let's back up. The thing that we thought we were acclimating to is not the thing at all. It's a whole other thing. And we don't know which world we're in again. So all of the normalization, ostensibly, that happened after the panic in April now gets a chance to get rerun.
It gets a chance to be rerun. Thomas, we have a rerunning of some things here after hours. Appeals Court has said that the trade court's ruling that the Trump tariffs are illegal, that is stayed temporarily, so the tariffs are back on while this gets sent forward to the Supreme Court.
Here we go. Welcome to uncertainty, everyone. Say hi to the new boss, as bad as the old boss.
What's the story of today, right? If I went to sleep last night and didn't see the tariff news and I woke up just now and tuned into overtime, what's the story of today's market?
I mean, you got the tariffs, you got NVIDIA. If NVIDIA's earnings were bad, of course, I think we'd be down a lot more today. And ultimately, I think NVIDIA's earnings are probably more important than the tariffs. The thing is, the court says, one thing, this administration isn't likely to say, oh, the court said this, we're going to back off, No, it pushes the time frame out. I mean, if it was a case of, one court decision laying it to rest, the uncertainty would go down. However, I'm surprised to see the VIX only up about 1% today, considering, it does increase uncertainty. And to Ilya's point, it pushes back the time frame until we get a resolution on this. So not only do you have more uncertainty, but you have a longer runway until these trade deals are potentially settled, because it's going to complicate the negotiations. I was a little surprised to see equities hold up as well as they did today. Like I said, I think that is partially due to NVIDIA kind of floating the market a little bit. Jensen, he had some comments. China definitely hurt them, export controls and everything like that. It seems like he's talking more and more with Trump, so I would presume he's going to get more of his ear going forward. But at the same time, NVIDIA is trying to do workarounds to make chips that they can get into China. That's a big market for them. I don't know. This tariff thing, it's going to flip-flop more and more. It's court decisions now. I would assume the Supreme Court would be sympathetic, leaning at least a slight majority to, say Trump does have some limited authority to put on these kind of tariffs, or there's other legalities they could base them on. There's a few legal bases they could do tariffs on. So, of course, the administration, if they get roadblocked with one thing, they're going to try something else. I think it pushes out uncertainty. It's here. At the same time, I'm surprised to see the VIX only expanding ever so slightly today.
Volatility, we can call it up from where it opened. A little bit lower than where we closed yesterday, about 14 cents, but we barely move at all. I think that's the story of today, right? That we have these great headlines. Yesterday, Musk is leaving Doge. He's going back to give his attention to Tesla, right? We're getting the NVIDIA earnings. They're pretty good. Salesforce was pretty good. C3 AI was pretty good. All right. Now we get the court ruling last night. Boom, plus 2% overnight. GDP report comes out. Trump says they're going to appeal it. Now, the tariffs are reinstated. So what did we do? What did we do? What did we actually accomplish? I don't think we accomplished or learned anything. I don't know if you can read into today's price action. We covered this on Futures Power Hour, Ilya, and you were mentioning this at the start of the program. But there are many other avenues for the tariffs to go through, because the IEEPA tariffs are related to national emergencies, and there are no agencies required to make findings, and there's no limit on a duration of action there, nor is there a limit on a tariff rate. But through the other sections that they'd have to go through now, like Section 201 or Section 301, you would have to have an agency conduct an investigation first, and that takes time. Section 122, on the other hand, does not, and there's a 15% tariff limit for up to 150 days, and they could probably do that now. And we know that because that's what the court ruling said last night. The panel of judges, a Reagan judge, an Obama judge, a Trump judge, ruled unanimously the way that these are being done is, obviously there's no emergency related for the stated reasons, but heck, if you wanted to do it this way, just refile them under Section 122. So, I guess the picture here is this is a lot of noise. I don't know if there's any signal, Ilya, whatsoever from today.
I think there is. And I think the shape of the way price action develops, I think that is the signal. We saw basically 2-month highs over the course of the kind of 24-hour international trading day here in the futures, be it the NASDAQ or the S&P. We saw a major sell-off in gold. We saw a major sell-off in the dollar, in particular against yield-sensitive stuff like the yen, the euro. And then everything capitulated. The market is not so silly as to look at this and not know that in the very same court ruling that essentially put the brakes on these IEEPA tariffs, the judges themselves said, look, you could do this if you used this other justification. And by the way, you couldn't just do it by executive order. This is the other thing. You would need investigations. You would need justification, because sections 232, section 301, those tariffs stay, and those sections require you to go and investigate and justify. This is what, and that was done during the first Trump administration. I think part of the reason why the markets were not afraid of the tariffs come the election outcome in November was because they looked at the first Trump administration's way of doing tariffs and said, well, the on-ramp here is going to be long. They're going to have to investigate. They're going to have to justify how much can they really sell. I don't think they anticipated that there would be a blanket huge tariff announcement with no justification and nobody consulted and nothing checked all at once. But if you do it this way now, or you try, which would be very difficult, to justify the kind of reciprocal tariffs that the president has announced, you'd have to go trading partner by trading partner on these sections.
That's the other
very
thing
tough to do.
201 and 301 need to be implemented on a country by country basis. You can't just give a blanket order and say
That's
all goods related to widgets from anywhere on the planet. You have to be French widgets, Japanese widgets.
Why? Well, and explain and show evidence. Tell us why a particular industry, for example, if you're looking at section 232, tell us why a particular industry is hampered and why you're placing tariffs on particular goods. You couldn't just say, the Trade Expansion Act of 1964, if memory serves, I think is the year, allows you to put a tariff on all French imports. No. It would have to be a specific industry. You'd have to go and say, you know what, all this Bordeaux is really threatening California wine makers. And you'd have to sell that. So it's not easy. What comes now is uncertainty. And I think the markets reflect that. And I think the price action does.
Before we continue the conversation, Costco earnings are out. EPS comes in at $4.28 versus $4.24 expected. Revenues were also higher, $63.205 billion versus $63.1 billion. EPS is up 13% year over year. It's up 6% quarter over quarter. The revenues are up 8% year over year, but down 1% quarter over quarter. Guidance looks good. Dell, similar situation. They're offering further guidance that looks strong. We're seeing share prices there hold up. When I last saw them flash across a different screen, yeah, they're still holding up from 114 to 119 right now. Marvel, Ulta, they also had earnings come out. Just taking a quick sweep of their share prices, also trading higher here. So a nice little batch of earnings outside of Marvel. Nice little batch of earnings here to keep the market somewhat pointed to the upside here as the day goes on. Thomas, I mean, I hear what Ilya's saying about the price action and it being exhaustion, but we're also talking about like a really esoteric topic in thin liquidity where I don't know how many people are actually tariff experts out there. I certainly consider myself a tourist to that region. I've been reading about it for 7 years by force, right? So like I've learned some things over the past 7 years about tariffs and their history, but by no means would I consider myself a trade expert.
Likewise.
So Thomas, what do we do here with the stock market then? Right, this is a market that was meandering the last few days. The EU tariffs get called off on Monday. Where are we now?
Yeah, I'm no trade expert either, by any means. Capitulation, I could see that coming into the market here as we digest this news. Like you said, it's hard to, decipher how all these tariffs work. And, not even these big banks it's going to take them time to go through it and analyze how these knock-on effects from these court decisions are going to go. I mean, the earnings are good. We're seeing, like you just mentioned, Costco, Dell is up 5%. They're saying strong AI demand. So the underlying, thesis that's been driving the market, these AI data centers, which have actually had a notable impact on the economy, that's still a driving narrative, but it's going to come in, and how are consumers being impacted by these cost of tariffs? I mean, Best Buy was down 10%. They said they've already raised some good prices on goods. Gap is down. They said they've raised some prices as well. But how meaningful are these price increases going to be? Are consumers going to see this and start freaking out and, pinching more pennies? There are signs that, consumers have already eased up on discretionary spending. It's all about how long this lasts. If it's just a couple more months, maybe we get through this, and land on our feet. The markets continue to rally. At the other time, if this starts to feed in through more hard economic data, and we've already seen some things like housing starts and stuff go. That's from rates remaining high. I'd want to see, bonds go up, yields come down, some more clarity on tariffs before we get a next big bull push. Powell met with Trump today. Of course, Trump pressured him to, relax rates faster than expected. Powell pushes back, et cetera. Nothing's going to happen there. Right now, it's wait and see, but that brings in the prospect of capitulation in equities. How long are investors going to wait for, the next catalyst to drive us higher? Are earnings going to be enough? I don't know. I think you need to be strategic and pick your spots here. I'm not sure if I want to gain a lot of exposure to broad-based indices or ETFs. I'm probably going to stay with my equity exposure centered around AI-themed stocks, SMH, NVIDIA, chips, things like that.
Ilya, one of the less discussed stories of the day, although perhaps equally important, is that Donald Trump and Chair Powell broke bread today at the White House. Mm-hmm. Powell reportedly told Trump that all monetary policy will be set for non-political, analytical reasons. Trump, as is wont to do, insisted that cuts come down the pipeline. It feels like this news got buried a bit today with everything else going on, but you put it into the context of the GDP report this morning. GDP, with its revision, we finally get gross domestic income as well, and that's in negative territory. Yeah. So I can't help but notice after 8:30 a.m. Eastern today, bonds actually took a meaningful, if it's notes, if it's bonds, ZNZB, they actually took a meaningful leg up on that GDP revision. Yeah. What's the now new song for the bond market? Are we looking down the pipeline at slowdown? No tax bill, Doge is a failure. Like, it's just all noise, right? We're going back to the pre-scheduled programming back in January.
As you know, I have been a broken record on this. The question is consumption. What we've seen, especially when you look at these GDP numbers, is tons and tons of tariff front running. That makes sense. It starts as early as January. You start to see it in the PMIs. All of a sudden, Chinese manufacturing PMIs start to perk up. U.S. manufacturing PMIs start to perk up. And all the pain of uncertainty really shows up in services, which is not really the place where you'd expect a direct impact from tariffs. Most of what you see on imports isn't services, it's goods. Most services demand is a domestic thing. Domestic firms feed that. So when you see services come undone, that tells you that consumers are getting worried. And then you see the GDP numbers and they give you the slowest household consumption in almost 2 years, going back to the second quarter of 2023. Forget the trade side. Consumption is 68, 69% of GDP. Everything else is an afterthought. if all of these businesses have gone to front run the tariffs, which we know, we see it, it's in the data, if they've stocked up giant inventories, somebody's got to buy them. And if consumers don't then rush out to buy these things and clear these inventories, number one, businesses are left without a lever for continued growth because now they've front-loaded a ton of inventory. And so their uptake going forward would be significantly diminished. Number two, those businesses would be left with a giant non-performing investment. They would be stuck with all this product that isn't leaving shelves. Never mind the fact that just the consumption itself is the main driver of growth. So all of this adds up to a very ominous look for the economy, no matter what happens with tariffs going this way, tariffs going that way. If consumers have been spooked off to the sidelines, the economy is not going to grow. And if it's not going to grow, we're going to have a recession. And if the U.S. economy is going to be in recession, the world is going to be in recession because Europe is anemic and China is anemic and there is no offset. There is no safety net. The U.S. is the only game in town. So in this kind of environment, you get to the kind of narrative I've been talking about for a while. Recession classic. Bonds go up, dollar weakens, gold strengthens, as you have expectations that the Fed is going to see the recession eventually and act. What we just heard from the FOMC minutes this week, and I think Powell probably did the same song and dance for the president, is, well, look, how are we supposed to know what to do? These tariffs are a risk of higher unemployment because businesses, if they can't clear these now huge inventories, are going to be in trouble. They're not going to go out there and hire because they've just spent their money on all of this. They've also been spending all of their money shielding consumers from these tariffs and eating the cost in margins so they don't have to raise prices on consumers. That's what the PPI data showed us. And the retail sales data showed us that the consumers didn't show up anyway. So we have a situation here where businesses might retrench. That's bad for unemployment. But the tariffs are effectively a tax hike. Just a tax hike on imports. It's a consumption tax. And so that's inflationary. So what's the Fed to do? Is it going to hike rates to fight the inflation or cut them to improve the employment situation? Well, they don't know. And they've been very loud about that. Mm-hmm. And so they're saying, look, until we see exactly what's occurring, we're not doing anything. It's not like the Fed doesn't want to cut. They do. They've said they want to cut since before the election.
Kaplan said today that he doesn't think the Fed might cut this year.
There we go.
Yeah, that was terrible. That was terribly worded. Kaplan doesn't think the Fed will cut this year. Like, that's a possibility.
Yeah, sure. They very plainly don't know. And by the way, neither do markets. We looked at the spread in consensus expectations for second quarter GDP that the Atlanta Fed publishes when it compares it with their GDP Now model. The spread of baseline expectations is between a 1% contraction and 3% growth. Nobody has any idea what's going on. So, yeah, the Fed will eventually cut, but it's probably going to let recession happen so that it can say with certainty, inflation expectations will not get unmoored. We can really cut. The drop in demand will offset our inflation concerns. So yeah, maybe they'll cut They might even cut twice this year, but they're going to have to see some acute pain. And so, is this good? No, not for growth. Not for growth cyclical assets. Not for stocks, not for crude oil. But it is good for those assets that reflect speculation that eventually the pain will bring those rate cuts. So that's a weaker dollar, that's stronger gold, that's higher bonds, until it occurs. And once speculation becomes reality, then maybe you can think about undoing those moves. But if we've just extended the negotiating period on tariffs to whenever the courts let the president do something or other, maybe, and we're talking about 5 months out, we're talking about October, then the Fed has all the reasons in the world to sit firmly on its hands and go, you know what, if the recession happens by October, yeah, maybe we could do something. But if it doesn't, then I don't know.
Thomas, that's a horrible thought I just had. There's a non-zero chance that I go on paternity leave later this year, and I come back and this issue's still not resolved. I come back in 2026 and it's just still not resolved.
That's what it's looking like. But
I'm going to have a bearish opening if that happens, to wax poetic about all the pain for who knows how long.
Oh my gosh! Well,
to talk these markets down.
Thomas, could I talk you into thinking that maybe bond yields have a chance to turn the corner here? You and I were talking on Futures Power Hour yesterday about the bullish engulfing bar that had formed in ZB, and we found the inside day coming in yesterday. We actually get another bullish engulfing bar here today. This is now 2 of the past 3 candles have been these engulfing bars. So, consistent with the technical commentary yesterday, Thomas, when you have a bullish outside engulfing bar followed by an inside day, the third candle then becomes your cue. If you break the inside day's high, you're then looking for continuation to the upside. If you break the inside day's low, the bottom is not valid. Today, we had it on both ends briefly, but in setting a new low relative to yesterday and closing above yesterday's high, that does give us another bullish engulfing bar. So here we have these 2 setups back to back, trying to push through the 1-month moving average. I put on a short put spread here today. Is that a ridiculous thing to do, given how the market really doesn't have a rhyme or reason right now, seems to be moving on the headlines? Or with the GDP report revision today, with the cut odds bouncing back today, should we be taking stabs at calling a low?
yeah, I mean, I have a long call spread in ZN, so I'm long biased on bonds. Yeah, I mean the chart's nice right here. It's a potential bottom. It's breaking out. We get over that 1-month moving average. I don't know. I'm kind of positioned for Ilya's take on the market. I'm long non-US dollars. I have light equity exposure. My other plays are in, energy, things like that. So I think we do start drifting higher. We've seen the start of the year, Fed cuts get priced in, then they come out kind of similar to how we were last year. Maybe it depends on how fast this goes to SCOTUS, how fast it gets resolved. I think the faster resolution
tomorrow, apparently.
Tomorrow. Well, there we go. I mean, we have to wait and see. I think a lot of it hinges on what the Supreme Court is going to say the authority is here, because that's going to have cataclysmic implications for what these tariffs do and how they're going to be implemented. I guess we'll have to wait and see. I don't think we're going to have a decision tomorrow, are we? It's just going to go there for arguments, or is that how it works?
I mean, in theory, they could get relief the same day, right? The Supreme Court could just turn around and be like, "This is so open and closed, 9-0, whichever direction." Right? We don't need to spend a lot of time on this. I don't know. It just sets up for another weekend where you could have a gap, right? What if the Supreme Court decides to work through the weekend and we get a news report on Sunday? Oh, the Supreme Court is going to announce their decision Monday morning. You have a new headline to trade around. We
go up, we sell off into the close, we stay kind of it seems like we're on the verge of capitulation here for the equity market. That's my gut feeling on it.
Yeah.
Let's move away from equities here for a moment, Thomas, though, because I saw that there was some inventory data out for crude today. It seems like diesel stocks are at lows, right? We find ourselves looking at drawdowns accelerating. Oil's not finding a bid. Why is that not happening here? Why aren't traders looking at shallower inventories and lower stocks and seeing, oh, we have to rebuild and refresh these. I should buy some oil. This was a good news is not leading to a good action, in my view, is what I'm saying.
Yeah, I mean, gasoline stocks down, crude oil stocks down, distillate stocks down. At the same time, you've lost like 40-something rigs this year in the Permian and, the Shale Basin. The drill baby drill thing is not looking like it's going to happen right now. OPEC is saying they're extending production cuts or unrolling these production cuts to allow more supply onto the market. At the same time, you have consumption weakening, but fuel demand has held up rather well. Gas Buddy reported you get a 2% rise in fuel demand over the last week. Gas inventories are dropping. It's weird. I have an Iron Condor on right now. It's between 58 and 63.5. I still feel comfortable there. I see more chop in the oil market. I don't think we pick a decisive direction until these tariffs are off. I mean, the OPEC stuff, they're saying they're going to unroll these production cuts. At the same time, Saudi demand within the economy is strengthening, so it makes sense they're going to produce more, but that doesn't necessarily mean it's going to one-for-one translate into more exports. So these production rollbacks, is it actually going to translate into a lot more supply onto the market, or is some of that at least going to be absorbed domestically by OPEC members? I think that's kind of a big question for the market right now. I'm on the view we just kind of sideways chop around here, right around 60 for a while. I mean, that's how I'm positioned. That's how I'm playing it.
I've got a put vertical here, basically looking for this range top to hold just on pure risk reward grounds. So we got to the range top, we got stuck there again. We can't make hay. If you're wrong by a little because the breakout happens fast. If you're right, you get a drift back into kind of the 55, 54 area for a trade. I've got lots of duration in it to give it time to do those things. So we'll see. I have it through a little baby MCL vertical. So risk defined, less than 1% of equity, even if it expires worthless. So I'm just taking a stab here. I don't have a particularly strong view this way or that, but the risk reward seems like it's better to be short than long. And if you're thinking that a recession is coming and that the Fed is going to allow it to happen, at least at the onset, then being short something so cyclical makes sense. Copper seems to confirm to some extent.
Yeah, I mean, I feel like I'm personally still directionally neutral right now in oil, and given the fact that we haven't gone anywhere since this trade was put on, I'm fine with it. But if I'm thinking I want to approach this directionally right now, I have a very difficult time thinking that the long side is the better of the two. If only because that area between 63 and 64 has clearly been ironclad resistance. We've been riding there's something up here. We've been holding up against the 1 month for now, and so maybe there's something down below 60 that's keeping us elevated. You can kind of see how this trading range, it's slowly been coming together over the past few weeks. It's about $4 wide. So if you're above 64, you're a little bit more bullish. If you're below 60, you're feeling a little bit more confident on the bear end. Today, you couldn't quite get the bearish engulfing bar. We don't close below yesterday's low, so more chop. And it's a 48.6 IVR, which is a little bit better than what you're seeing in equity markets right now, where the IVRs have dipped into the low 20s, if not the high teens at various points. We're not seeing drill baby drill, Thomas, right? Like we were expecting drill baby drill is more production, more rig counts, more people employed in the industry. Chevron was out today saying that they're going to have to cut 800 jobs starting in July. But production's not falling. So, I mean, where does this leave us? Could we be heading into one of those idiosyncratic cycles for oil where, regardless of what's happening with the U.S. economy, oil has its own tune that it sings? And I feel like we saw that in 2023 for a chunk of time.
Yeah, I mean, it seems like the oil market is expecting a little softer U.S. production through the rest of this year, the second half. So lower supply from the U.S. The non-OPEC supply outside of the U.S., there's a lot of variance in forecast between Goldman and, the other forecasters. So, I mean, you look at things that are proxies for the physical market, like the prompt spread, its backwardation is now 74 cents. That's the highest it's been since late April. You look at things like crack spreads, those are still holding up fairly well. They've dropped off over the past week, but still significantly higher than where we were at the beginning of the year. So, I mean, it's a market that's kind of, there's a lot of moving pieces. At the same time, OPEC wants oil around 70, 75, around there. So they obviously want to get prices up. Releasing more supply in the market kind of is counterintuitive for that. But, if the recession does happen, then definitely skewed to the downside. Like I said, I'm range trading here. But if we get down, to those swing lows back in early May and April, then that's where you're going to have to reevaluate. Are we going to punch through a floor? If we do, that probably means, recession. If we stay swinging around here, it's simply the status quo is pretty much held. We narrowly avoid a recession. OPEC's releasing more oil. U.S. is producing a little less. You got a few outliers or secondary factors to consider. Venezuela, Chevron can't export oil. They can keep producing it there. They can't export. The Iran deal's ongoing. U.S. seems really soft, or not really soft, but they seem like they're offering some concessions. Israel certainly doesn't, probably agree with that. But, we'll have to see how things shake out over the next couple of weeks. If these gasoline inventories keep falling, crack spreads stay high, the physical market gets supported, I think we stay above 60.
Stay above 60, but difficult climb ahead, and that kind of is the perfect environment for directionless range trading. And we do have the IVRs near the 50 right now, so instead of getting chopped up day trading stocks, you maybe want to take a step back and look at something in the energy sector. Gasoline prices, by the way, gas futures here with a pretty ugly bit of action today. Ilya, I only point this out because if gas prices fall, it can disincentivize refiners. Thomas is just talking about the various spreads. Also, gas is a little bit more directly tied to consumption as we know it as consumers. So falling gas prices, there's a world in which gas prices are sideways and oil prices are going down. That's probably like the best macro signal you get. More supply in the market, but the demand is there to keep the end product price elevated. This one, it's like oil's chopping around, but gas is falling. And that's probably not a strong demand signal beneath the surface. We have 15 minutes left here today. One of the tells this morning on the other side of that GDP report, gold really did hold up better than I thought it would. When I was looking at the charts last night, guys, I said, oh, well, if stocks are up 2%, tomorrow's going to be a terrible day for gold. Maybe tomorrow's the day that I capitulate. And so color me shocked when gold was back comfortably, back above $3,300 when I turned on my platform this morning. Ilya, is this just another sign that gold retains a great deal of narrative flexibility and it's kind of just a steady grind to the upside again?
I think you have to look at today how it all kind of played out across assets. And I think what you see is basically the same move seesaw across markets. So the first thing that you see when the news comes out, it hits, and I'm going to say this in GMT terms, just because I like looking at that, because there's no daylight savings adjustment, so things are consistent. But at the same time, at about 2200 to 2300 GMT, so right in sort of the early overnight, let's call it about 3 hours from now, on the dateline, you get the news from the courts, and stocks surge, and gold cracks, and the dollar jumps, and yields jump, and all of it happens at the same time. And for about 4 hours, it all holds, and then all of it unclenches. Basically, as soon as Europe comes in, Asia is always a little bit dicey. It's a little bit thinner markets. Soon as Europe comes in, at the opening bell in Europe, is when things turn, which is about 8 a.m. GMT. Once bond markets in Europe open and significant liquidity comes back into the markets, everybody goes, yeah, no. This is the wrong read. The read here is not that the tariffs have been put in a box, okay, great, moving on. It's that now we have a prolonged fight, and the thing we've been trying to acclimate to basically since early April has been thrown into limbo again. None of this makes any sense. We just got the president to show that he's responsive, that he pays attention to market discipline, that a nice phone call with someone like an Ursula von der Leyen fundamentally changes his mood and can take tariffs from 50% to 10% in a weekend. This is good. This is good. We can work with this. But then not. Now you're asking the president in press conferences about the taco trade, and then you take away the whole thing, and you get him pissed. And if you do that, you're inviting all manner of combative shenanigans, and you've got 5 months of this now. What are businesses and consumers going to do? And it happens in gold, it happens in bonds. And I mean, to me, gold is just another reflection of this thing that's happened over the past 24 hours, where the markets go, hey, and then they go, wait, no, not hey. Oh.
Did you guys ever watch Parks and Rec, the TV show?
I didn't.
Yes.
I'm aware of it, obviously.
Yeah.
Okay. Thomas, in season 1, they did a cultural exchange with Venezuela, and Fred Armisen plays like a Venezuelan colonel or something.
Straight to jail.
When I heard those comments yesterday from that reporter at CNBC, I was like, "Are you out of your mind? We have a good thing going on here, okay? You can't keep your mouth shut. You're gonna mess this up for the rest of us. Like, don't tempt him, man. We're gonna get tariffs just to prove that he's not a chicken."
Yeah.
Like,
yeah.
Take away your press credentials.
Really? You see bull and you think red rag? Really?
Yeah, Thomas. I was like, right to jail.
What? Like, we just got done acclimating to this, man. What? Now? We need this now?
I was a little surprised that question came up, I was a little surprised, but it makes for a funny moment.
So everybody says that you're weak-kneed and you suck. Your thoughts?
Okay, but that still brings up my favorite interview ever. And when people say like there's a bias in the media against Republicans, this is like the one thing that sticks out to me. And there's plenty of examples, but this is the one that stands out the most. It's like the 2016 election cycle, and Dana Bash has on Heidi Cruz, Ted Cruz's wife, and she says,
I remember this.
Your husband is one of the most reviled people, just like people on the Senate. Senator Lindsey Graham has said that if Ted Cruz was murdered on the Senate floor, he could no explain.
Thoughts.
Your thoughts. What kind of